start. Good evening. And first thing first, happy Mother's Day to all the lovely mothers of all our members. I would like to say to each one of the mother, and you have to convey this to your mother on behalf of the chapter, that her son or daughter is making her proud with each passing day. Reaching to a city like Dubai and sitting among this elite crowd is no less than an achievement. So happy Mother's Day to all your mothers and also to our lady members who are mother. A round of applause for all the ladies sitting there. Moving on, warm welcome to all the dignitaries, elite speakers of the day, our pride, our past chairman, our Central Council member CA Raj Chawla, Regional Director of Middle East and Africa CA Prabdeep Baweja, media houses, all my seniors and fellow members to another important event. Along with us, our speaker, who is also our past president, CA Atulji. Inviting you to the important event, Tax Talk on Corporate Tax and Transfer Pricing. Being chartered accountants, the work tax is very close to our heart. We have studied so much taxes during our CA days that I can relate the same to Arjun Singh. You don't know who the Arjun Singh is? Let me play something for you, and you may be able to recall Arjun Singh, and here it goes. Technical team, can we have the video on the screen?
You see, sir, I can talk English, I can walk English, I can laugh English, because English is a very funny language. Bhairo becomes Baron, and Baron becomes Bhairo because their minds are very narrow. In the year 1929, sir, when India was playing against Australia in Melbourne City, Vijay Merchant and Vijay Hazare, they were at the crease, and Vijay Merchant told Vijay Hazare, look, Vijay Hazare, this is a very prestigious match and you must consider this match very carefully. So considering the consideration that Vijay Hazare gave Vijay Merchant told Vijay Hazare that ultimately we must take a run. And when they were striking the ball on the leg side, sir, the consideration came into an ultimatum, and ultimately Vijay Hazare went to Vijay Merchant. Oh, shut up! Similarly, sir, in the year 1979, when India was playing against Pakistan in Wankhede Stadium, Bombay, Wasim Raja and Wasim Bari, they were at the crease. And Wasim Bari gave the same consideration to Wasim Raja. And Wasim Raja told Wasim Bari, look, sir, this ultimately has to end in a consideration which I cannot consider. Therefore, the consideration that you are giving me must be considered very ultimately. Therefore, the run that they were taking, Wasim Raja told Wasim Bari, you take a run, and ultimately both of them ran, and considerately they got out.
You see, sir, considering the consideration given by this clip, I consider I can talk tax, I can walk tax, I can laugh tax, I can run tax, because tax is such an interesting subject. This was none other than superstar Sri Amitabh Bachchan in a Bollywood movie called Namak Halal. But before we move further into the session, it's time for us to stand on our feet, have respect in our heart, smile on our faces, and national anthem on our lips. I will request all to rise from their seats for national anthem and ICI motto, please.
मन अधिनायक जय भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उज्जल जलधि तरंगा तब शुभ नामे जागे तब शुभ आशीष मांगे गाहे तब जय गाहे एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रदब्रह्मा तदब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you all. Please take your seats. Auditoriums are actually good. I can see all of you till the last. Normally in our banquets, when we are sitting flat, I can see few faces. But this gives me and tells me I can see across. And I love that few of our members were chanting the ICI motto. I can see Haridas Sahab chanted for it. We should all learn it like we learned our national anthem, and ICI motto should come along with us the way our other members are chanting. Thank you very much. It's time to move on and invite Chairman of the chapter, CA Hari Kishan Rankawat, on the stage for his chairman's address. Please put your hands together for the most energetic person, well known as powerhouse of the chapter, so much that he is standing before I have completed, our chairman, Sri Hari Kishan Rankawat.
Sir, आज क्या है, there are 4 speakers and we don't have much time. That's the reason I came before the time. Galaxy of the past chairman, speakers of the day, CA Atul Gupta, CA Sheetal Sapra, CA Samir Popat, and CA Chirag Gupta. Vice chairman, CA Rajesh Somani, my colleagues in the managing committee, and respected members of the chapter. A very good afternoon to all of you. Sir, we are keeping this session in the school because now we have to go back to the school in order to learn UAE corporate tax and transfer pricing. That is one of the logic. And another one is anyway budget, we can manage the budget as well efficiently. I welcome each one of you to our tax talk event today on UAE corporate tax and transfer pricing. And I would like to especially thank today our first speaker, CA Atul Gupta, who has come all the way from India to address all of us on transfer pricing. As you are aware, there are 11 ministerial decisions, cabinet decisions and FTA decisions which have been released recently. And our line of speakers, expert line of speakers, they will definitely try to demystify that all the cabinet decisions. So which we look forward, and whatever questions you have, you can always ask him. Now your ICI Dubai chapter were also working closely with ICI India and our regional director, CA Pradeep Baveja, in order to develop a book on UAE corporate tax, which is now 416 pages, and it has already been released recently. So I will request the secretary to distribute to all our members on the WhatsApp as well as on the email. And this is available, I mean, a soft copy anyway, PDF is available free of charge, but if you want to really buy, it is only, the pricing is only for 630 Indian rupees only. And for which I am thankful to ICI leadership, Central Council member and Direct Access Committee of the ICI India for this background material, which makes a big difference in our lives. Can we have a big round of applause for the ICI India, ICI Dubai chapter, ICI Abu Dhabi chapter, their ExCom for all their contribution towards the preparation and publication of this useful background material for the benefit of all of us. Now I would like to share with you the calendar of our forthcoming events so that you can plan accordingly. On 21st May, we have indoor cricket tournament. 23rd of May, we will have an event, technical event on the international standards on auditing as well as on the quality control standards. And on 27th and 28th of May, we have a workshop, Power BI workshop, automate your work and elevate your life, for which I am thankful to our ExCom member, Sanjay Gagrani. Can we have a round of applause for him? Because he was working on this actually Power BI workshop for the last 2-3 months in order to manage the logistics. And then on 4th of June, there will be a badminton tournament. So be ready. I think there are two sports events, and so we would like to have your participation as much as possible. And friends, this is the last tax-free month. We will be organizing a monthly webinar, monthly seminar on the UAE corporate tax as well as on the transfer pricing. And there will be a surprise speaker today after two speakers. So he has got a direct entry, but it will be only for 15 minutes in order to rejuvenate or reactivate yourself after heavy workshop by C. Atul Gupta on the UAE transfer pricing. And now I wish all of you a great learning and happy Mother's Day. And thank you very much.
Thank you, Chairman C. Harikishan Rankawat, for sharing the calendar ahead with all of us. It's also my responsibility, as he said, to acknowledge the efforts of all our committee members. A round of applause for all our committee members. I will tell you what exactly they have done. If you see cricket has been headed by Rishi Chawla and Ashna Mulgaonkar. They were the people who are responsible for it. We stand here, we say, yes, we are organizing it, but the people behind that events are our ExCom. So cricket has been organized by Ashna and Rishi together. Badminton has been done by Malvika along with Dheeraj, and as rightly said by Chairman, Sanjay has been the backbone of Power BI. Round of applause for all our ExCom members, because June में भी तो हमको events करने हैं. Now it's time to jump into transfer pricing, the most important topic of the day, to be presented by an equally important speaker who traveled from India to enlighten us with the potential insights of the subject. Before I call upon our respected treasurer to introduce the speaker, I would love to share two lines about Atul Bhai. I call him Atul Bhai because he's like an elder brother to me. It was 2019, and he was then Vice President of ICI. He came here to Dubai, and he was required to address our audience like this in an event, and I was given the opportunity to introduce him. I went to him and asked, "Sir, what do you want me to necessarily cover in your profile?" And he said one line, which shows his humbleness and greatness. That line was, and today I pass on that line to our treasurer to take it forward, and he said, "Jai Bhai, please keep that paper in your pocket and say anything and everything from your heart. I will be more than happy." What I did? I had to say the same thing to our treasurer, C. Rishi Chawla. Please come on the stage, introduce Atulji from your heart without the paper. Thank you very much. A round of applause for Rishi.
It's not, he said paper, but not the phone, so I remember, smartness being a chartered accountant, this is the skill we have to learn, that find the opportunity that suits you best. Right, so Jayaprakash, as always, in chanting and style, we all know, it makes a huge difference. Thank you so much for all your energy. Dear member, Shri Atulji, former president of ICI, we are proud to have you here. And speakers of the day, ladies and gentlemen, a very good afternoon to all of you. I'm so grateful for your presence here today. First of all, happy Mother's Day to everyone, because mother is the best. So when I was coming to the event, I called my mother to say thank you for all she has done for me all my life. So I think this is one of the days which is giving me a lot of warmth today. So that's a very great day and such a great event we are having today. As we know, tax is not very uncommon word and maybe a pain for business, but it is a big plus for the chartered account, especially in Dubai. I remember when I came 2005, there was no taxation, so accountants were like, just any other admin staff in the office. But this taxation is actually creating a little bit of grammar and push and the power for our profession, and I'm sure, and we are definitely making a huge difference as we are moving forward. And secondly, I'd like to congratulate our energetic chairman, Shri Harikishan Rankawat ji, for selecting a topic which is of the importance and at the right moment. So I'm learning from him. He's such a great leader. Thank you, Chairman Saab. So among all the topics, we know one of the topics which has always been a matter of interest to all of us, and especially, there are other things people can still manage, but a topic like transfer pricing, we really need a different kind of a skill and different kind of experience. And this is where I think chartered accountants fit the bill in the best of ways. So to talk about that, we have our former President, Shri Atulji here. So I'll just read. There are a lot of things about him which inspires me, but some of the things which I have, looking through his profile, which I like to just talk about here. So he's the former president of our ICI, the largest accounting accounting body in the world itself is a big word. To handle that kind of a pressure and handle that kind of an audience means a lot. So I'm sure your presence itself is giving us so much energy. I think you can see the room is full. Thank you, sir. Thank you for your presence here. One of the things which I really liked looking at his profile is that he's the person who's been congratulated for writing the accrual basis of accounting for the Indian Railways. So Indian Railways, the biggest network we know today, and his contribution to that is a great plus. And thank you. We are still, trying to get the learnings out of you, and this is another opportunity for us. So a few more other things. He's on the board of International Federation of Accountants, XBRL International. Earlier has been the chairman of Committee on Education, Training and CPD for SAFA, board member of SAFA, IIRC, PFC committee of CAPA as well. So without holding you much from such an elegant speaker with us, with big round of applause, please join me in welcome CA Atulji.
A very good afternoon, ladies and gentlemen. At the outset, my special thanks and gratitude to the Hari Kishan Bhai, the dynamic and young and dynamic chairman of the Dubai chapter of ICI. I also acknowledge the presence of the very humble and down-to-earth Central Council member of ICI, who is always smiling a face for, and like an elder brother for me, C.A. Raj Chawla ji. Apart from that, the other management committee member, I will take the names. But before, we have the honorable past chairman of the Northern India Regional Council, C.A. Avinash Bhai. Jayaprakash ji, to whom I believe that I was just suggesting him that you should do a voluntary service as a RJ as well, maybe in a month or two, or like a, so it will further nourish your this the way you are doing this MOC. Rishi Bhai and all other management committee members, thanks Rishi Bhai for the nice introduction. As far as the Mother Day, I also convey my sincere gratitude to all of you for the Mother Day. It's a very emotional subject for me. That's why I'm not speaking much on this. But Jai Bhai mentioned is some pride. I believe that the mother will never have the pride. She has everything to give rather than to receive anything from us. So it's a other way around that whatever we are doing, always there will be a blessings from the mother. Rishi Bhai just mentioned a point I just wish to touch upon, because as you mentioned, as I remained the president of the ICI, so I have the different perspective. Rishi Bhai just mentioned that because of the corporate tax, we feel that it's a burden or a pain for the industry, and it's a good for the professionals. Just to give you the other perspective, that we are not looking for any work. We should not be. And we should not feel as if it is a good work for us. Ultimately, if the industry has to grow, they have to have the more and more compliant industry, compliant citizen. They want to deal, they want to negotiate with the global market. Certainly, they have to be more tax compliant, more transparent, more audited. Their financial statement should be reflecting a true and fair view. So rather than it's a privilege for us, we are doing our duty, that we are supporting the industry, we are supporting the business to grow. Ultimately, what we are getting, maybe 0.0001% of the entire, I will say, the monetary aspect of the entire organization. So it's the industry, rather than that they should feel that yes, somebody is there who is putting his midnight oil, putting his the entire life just to gain that kind of a knowledge and experience which he is giving for me for only a small fraction of a fee. So if that will be our feeling, if that will be the message to the industry, I believe that they will feel that it's, oh, they are actually supporting me rather than it's a privilege for them. that, okay, they are getting a new opportunity or something like that. So today what we are doing on a Sunday, rather than sitting with the family, you are here. Why? Just to update yourself so that you will be able to serve somebody who is going to, you understand the rest of the things. So I should not speak. Friends, the topic which is assigned to me by Hari Bhai, that I came directly from the airport only. So just to share my thoughts and the feelings about the topic. Because that when we talk about the arm length price, the arm length price not only related to the corporate tax, but wherever, even maybe for the indirect tax, for the corporate matters, everywhere, there is a one or the other way where we are dealing with the arm length or the related party transactions and how they are getting reflected. Even you can speak, say for example, when we were studying in the CA examination, everybody was dealing with the related party transaction, that whether the company is, whether they are reporting the related party transactions or not, or whether they are having a bona fide transactions or not when they are dealing with a related person. So my dear friend, as far as the corporate tax is concerned, because the time is limited and I have the habit to speak and speak and speak for maybe for hours and hours. So, but when you are coming to the international chapter, you have to speak within the limited band of 30 minutes or 40 minutes like this. So I have to skip my whole introduction otherwise. Just to share with you, when we discuss about the corporate tax, I have prepared a small slide for all of you. That transfer pricing I am coming in a minute. But just to share with you that when you are dealing with the the corporate tax per se, there are the many things which all of the professionals should learn. That, okay, what will be the possible impact of the corporate tax in an organization? So my dear friend, when we talk about the impact of the corporate tax on the organizations, there will be the one side of the impact when they have to rework their new pricing and the margins. Why it is so? Because I just mentioned, I am not reading each and every line, but just to share with you. Similarly, there will be the impact on the supply chain management, their business remodeling. Why it will be? Because they have to have the multiple registrations, the human resource, working capital, the compliance cost, and then the warehousing and the CF agency, many decisions they have to take. Similarly, the IT infrastructure, the handling the line item data. Now, recently you have got the new order for the master file vis-a-vis the local file. The handling the line item data, multiple registrations, reconciliations, MIS for the audit and this anti-evasion cost center. And this is something very, very important for all of us, that the branch transfer, credit lying at the multiple registration, and many others. So my dear friend, these are the aspects which I believe that each one of us in the times to come will be handling in one or the other way when we are handling the corporate tax in any organization. Now, my dear friend, coming to the transfer pricing, just to share with you why this transfer pricing is getting discussed. My dear friend, the fundamental of the transfer pricing, if you agree with me, will be a situation when the two associated enterprises, whether they are locally associated or they are, one of them may be the outside the jurisdiction, for example, outside the Dubai. They have certain transaction in between. Maybe the transaction in relation to the rendering of service, supply of goods, maybe taking the royalty for the intangibles, meaning thereby there is a transfer of property. So whenever there will be a transaction between the two associated enterprises and they are charging, so there may be, they may be charging certain amount, they may be charging certain service fee, they may be charging certain cost, allocation of expenditure. So when they are doing this, between the two associated enterprises, the two related parties, the two controlled parties between each other, then whether that transaction, whether that amount which is being charged is actually an arm length price or not. In an uncontrolled situation. So if, say for example, I am dealing with the Raj Chawla ji and both are related with each other. So the amount which I am charging from Raj Chawla ji, and in case I am dealing for the similar transaction with Avinash Bhai, and who is an uncontrolled party, so whether the price which I am charging from Raj Chawla ji is comparable with the price which I am charging with the Avinash Bhai or not, is something is about the arm length price vis-a-vis the transfer pricing. So the purpose is the government should not get the that this should not be a situation that the multinational enterprises are avoiding any kind of tax. The tax regimes are equitable, they are fair, and whatever the due tax is there, somebody is paying to the government exchequer. So ultimately, the government is looking that, okay, my dear friend, whenever there will be a related party transaction, I have to check whether this transaction, the related party transaction, is at the arm length price or not. So my dear friend, the transaction may be, as I mentioned you, the sale, purchase, the lease of tangibles, intangibles, provision of service, lending, borrowing, even. So you have to, whenever you are discussing, whenever you are dealing with any of these kind of a transaction, it should not be simply you have to see that, okay, if I am selling to them, then only the arm length price will be triggered. No. Even if you are giving a loan, if you are exchanging the money, you are having the borrowings among each other, or providing the royalty or paying something like that, each and every transaction, whether related to the tangible or intangible, will have the impact of an arm length price that, okay, that should be of a arm length. Arm length means when you are dealing with a related party or an unrelated party, the both pricing should be the same. And ultimately what we are going to do, that we are going to derive out that arm length price in a different situation in the next few minutes. Now, my dear friend, when I am discussing about the intangibles, I am just giving you a glimpse of the intangibles when we are talking about. It includes the copyrights, patents, trademark, license, franchisee, brand, even funding, the provision of service, and even about the business restructuring. So, my dear friend, the tangibles includes the many transactions which are being given in this slide. So I am not touching this slide per se because there is a paucity of the time, and I wish that the presentation will be available to all of you. You may refer this presentation later on. Now, my dear friend, let us come to the legal formation of the law as given in the corporate tax of the UAE. Article 34, 35 deals with the transfer pricing or the arm length under this corporate tax regime. And recently, the day before yesterday, the paper issued that also tried to clarify. It's like a explanatory notes of the corporate tax law that, okay, whatever I have mentioned in the Article 34 or 35, you have to read like this. Now, my dear friend, the Article 34 in a nutshell says that ultimately you have to achieve the arm length price. You have to see that if you are dealing with a controlled person or an uncontrolled person, the pricing should be the same. The profit should be the same. Whatever the revenue you are getting should be the same. Now, how you will do that? Because there will be a kind of a situation that, okay, you have to arrive that. So for that, as per the OECD guidelines, because ultimately what we have to do, that each one of us, whether we are living in one jurisdiction or another jurisdiction, we have to all follow the OECD guidelines, and which provides us the 4-5 formula that, okay, by virtue of that, you can derive out the arm length price on a different kind of scenarios. For example, when you are dealing with your agent, there will be the different method which will be followed. And in case you are dealing with in a normal kind of a sale or purchase transaction, then there will be the different kind of a method you have to employ or deploy. Now, my dear friend, as being given, these are the 5 important methods which are being given under the law, under this Article 34, vis-a-vis the OECD guidelines, which are normally being followed by the organization. But at the same time, the Article 34 provides you that, okay, if you have any other method other than these 5, you can also deploy, but the principle you have to follow should be the same. Now, what are those principles based on which you have to follow the formula? I am going to discuss you later on. Now, my dear friend, before I take you to the formulas per se, the practical side with the illustration, I just wish to share with you the related party. Who is a related party? So we will not take much of a time on this because this is I will say since childhood we are reading who is a related person. So nothing new is there. Even we are more expert than this kind of a small definition which is being given. Meaning thereby, if you are a natural person, though they have given the 4 level of kinship, but otherwise if you are a judicial person, you have the effective control over the other. Now, how the effective control will be there on the other, which is also being given, that in case you are having the ability to exercise more than 50%, meaning thereby you have the voting right of more than 50%, you have the more than the board of directors, you have the influence, you can take the decision-making process. So everything they have given, that in case it is something like that, then it is a related party. So, number one, why we are discussing? Because we have to achieve the arm length price. It is a sovereign, it is a country requirement that, okay, you should pay the tax as per the requirement, number one. Number two, between whom this transaction should be, I will say, the identified and neutralized. The word is neutralized, because in case you are dealing with a related person or an unrelated person, that transaction has to neutralized at the par level. So, who are the related person is being defined, so nothing new in that. And now comes the, I will say, the methods. So, my dear friend, as given in this slide, these are the 5 important methods which are normally being deployed by the organizations to achieve the arm length price in a different kind of scenarios. My dear friend, the first method, which is a transfer pricing, the comparable uncontrolled price. Now, what is this? My dear friend, this kind of a method is normally being deployed by the organizations. Again, it is associated between the two related person or between the two associated person when there will be a simple transaction of a sale and purchase. Say, for example, as I mentioned you, I am selling to the Raj Chawla ji, and I am also selling the same product to Mr. Avinash. The Raj Chawla and myself are the related person. So, whether my price which is being charged from Raj Chawla ji in a uncontrolled situation, whether the same price which I am charging from Avinash is comparable or not. So, if I am charging, say for example, 8 rupees from Raj Chawla ji and saying that, sir, my profit is only 1 rupees, and even at the same time, I am charging 10 rupees from Mr. Avinash and I am showing a 3 rupees profit. So, what I have to do? I have to add back, what the authorities will do, what the auditor will do, will add back 2 rupees into my income to achieve the arm length price which is normally should be there. So, my dear friend, if you see the definition I have covered you, so the advantages, because it's a very simple methodology, as you can see that I have given you in just few words that what will be the methodology, that you have to have the price of a controlled situation, you have to price of an uncontrolled situation, compare them and just do a adjustment of add back or a minus, and then you will be able to achieve the arm length price. The only point which is very, very important here, that at times there will not be any comparison available. The only the disadvantage which is being given even here, that the disadvantage of this method is that at times there will be a kind of a transaction between the two enterprises which are very unique in nature. Say for example, you don't have any comparable. So let us say that I am selling this, say for example, this slide changer to my controlled party vis-a-vis to the uncontrolled party. So how you will be able to get the data to check the comparability, that okay, this transaction to an unrelated person is also available. So that is the challenge which is there into the system. So let us, my dear friends, let us have an example. So what we have to do in this kind of a situation, that we have to do identification of a price charge from the, as I given, the price has to be adjusted for the differences, whatever the differences are there on, and then finally the arm length price will come. Now my dear friend, here is the example. In this case, Mr. X Limited is selling the product to the two person, to the Y Limited, who is a related party, and to an outsider. And in case of a X Limited, the X Limited when selling to the Y Limited, he is charging, for example, 4,000 US dollar. Whereas in a normal situation, he is charging to the outsider at the value of 6,000 US dollar. Now, my dear friend, as being given that there is an adjustment required, because when he is selling to Y, he is selling to a Y Limited, he is selling in a bulk order. So the policy of the company is that when I am selling at the bulk value, then I will be giving a 10% discount. So that the adjustment will be a business adjustment which will be required. So there will be a situation when we are going to discuss another example, that say for example, you are selling the similar product, but say for example, the the quality is different, then you will be giving a small adjustment. Say, for example, you are paying the custom duty normally, otherwise you are not dealing with the custom duty. Then you have to give an adjustment of that custom duty as well. So what I'm trying to convey you, that there will be an adjustment required. So simply it will not be the case that if you are selling to Y Limited for 4,000 and you are selling to an outsider for 6,000, 2,000 will be straightway added into your income. No. There will be a genuine business call that when you require certain expenditure, certain specific expenditure or certain specific relief, which you have to do the adjustment. So in this case, though the price is 6,000, as I mentioned you that in case you are buying for a bulk, the $400 discount is being prescribed. So practically the arm length price will be 5,600 rather than the 6,000. So what do you have to do? That in case you are dealing with the X Limited is dealing with the Y Limited, in the profit which is being earned and reported to the government as that, okay, I earned 4,000 US dollar, the $1,600 adjustment will be required by the authorities and there will be an add back to your income and then only the adjustment or the assessment will be there. So this is the way that in case of a comparable uncontrolled price method, the calculation will be. Now, my dear friend, coming to the second method, which will be a transfer pricing, the resale price method. Now, my dear friend, where this method will be normally used. Normally, this method will be used when there will be a principal-agent relationship. So, in case we are dealing with a normal business, we will be going with the first method. But in case we have a dealer, so if I am dealing with a dealer, somebody say, for example, a manufacturing company is there in Dubai, and they have the dealers available. And then they are selling to a person other than the dealer as well. So in case when you are giving the product to your dealer, whether that is on an arm length price or not is something that we need to check. So for this kind of a method, for this kind of a situation, we have to follow the resale price method as being given in the definition. There are the certain benefits available because this is a quite a simpler kind of a methodology again, that you have all the data available because you are only dealing normally with the resellers. But again, that this method will have I will say the preamble that the reseller is not adding any value addition, is not giving any value addition to the product per se. So say for example, I am a dealer of a company X, I am buying and selling, I am not doing any value addition. But in case there will be a value addition, then the problem will be that how you will be able to compare the price from the open market. So in case you want to use this method, it will be practically buying and selling rather than doing a value addition, and then again there will be a problem that you have to go with any other method. So whenever you have the situation that you are doing a transfer pricing of a client who is having the dealer's franchisee network and you want to go for an arm length price calculation, this is the right method you should be deploying with. Now, my dear friend, let me give you the example. Again, the steps I have given you, so not to discuss all these steps. So, my dear friend, in this case, now A Limited, Dubai holds the 60% share in the ABC USA, and A Limited purchase worth this, this 20 lakhs INR from ABC. So, rather than I will say it should be a dollar or otherwise. So this 20 lakhs from ABC and sold to unrelated person, CC Limited in for 30 lakhs. A Limited paid the INR this 3,50,000 as a custom duty for the imports as well. So normal profit margin is 25%. So now the question is that my normal profit is 25%. The gross margin is, profit margin is 25%. But here in this case, I purchased for 20 lakhs. I sold for 30 lakhs. Even a custom duty of 3,50,000 was there. So whether this is an arm length price or not. So my dear friend, if you will go with the answer, so when I'm selling for 30 lakhs with a 25% gross margin, what should be my cost of goods sold? It will be 22,50,000 with a profit margin of 7,50,000. Then I have to reduce the custom duty because I paid the custom duty also. That is 3,50,000. So ideally, what is happening that I'm selling for 20 lakhs, I'm buying for 20 lakhs rupees and selling for 30 lakhs rupees. Practically, it is not the right arm length price. At least 1 lakh I should have charged more to achieve the 25% profit plus the custom duty which I have paid. So practically, my right price of selling to my dealer or the distributor is 31 lakhs rather than the 30 lakhs which I claimed from my dealer. Are you getting me? Are you getting me? So this is the way, this is the second methodology. When you are dealing with a retailer, you are dealing with your distributor or a retailer or a franchisee, that how you will be able to achieve the arm length price. Now, my dear friend, this is the third method, that is the cost plus. And the cost plus method is normally being deployed again when you are selling a semi-finished product to your related party. So in case you are selling the semi-finished goods to your related party, there will be the addition of a cost, addition of some kind of a value addition into the system, and then ultimately the product will go out of the market. So in that kind of a situation, the normal method which is being getting deployed in the global transaction is the cost plus method. My dear friend, again, the cost plus method have the own advantage and the disadvantage. That you have the more of the disadvantage is that you have to go for a cost calculation, and then prices are always, because the value addition, how you are doing the value addition and what kind of a value addition is there, you can't compare with a apple to apple kind of a situation, because you may have a different kind of a value addition in one scenario and the different kind of a value addition in the another scenario. So there will be a challenge always that will be there. But again, my dear friend, the methodology seems that, okay, you have to do a kind of a calculation with while giving the adjustment for any kind of a special situation. So my dear friend, here is an example. So here in this example, normally the price which is being charged from a related party vis-a-vis the unrelated party is being given. The ABC Limited Canada, which is having the control on this LMN Limited and all, the LMN Limited during the year billed to ABC for the 120 man hours with the rate of $1,800 per man hour. And the total amount which is being charged is $225,000 US. Normally, when the LMN is charging to any other company, they are charging $2,800 per hour. Whereas they charge only $1,800 per hour when they are a related party transaction. They have the profit margin of 50% normally, which they are doing. And so they are looking for a 10% also the quantity discount as well. So my dear friend, in this kind of a scenario, just to share with you that normally the gross profit margin is 50%. When they are doing in a bulk, you are giving a 10% discount. So meaning thereby, in this kind of a transaction, when you are dealing with an uncontrolled transaction, normally your profit margin should be 45%, whereas normally it is 50%, but because you are giving a discount, it will be 45%. Now, the amount which is being charged by the related party is $225,000 US. So normally, what should have been my profit? It will be 1,01,250. So what I should charge? I should have charged the 3,26,250, whereas I charge only 2,16,000. Meaning thereby, the authorities are going to add 1,10,250, something like that, into my income, because that the arm length price, the price which I charge with the controlled party is not an arm length price, and there will be an adjustment required in this kind of a scenario. So this was the third method which is being normally deployed by the organizations when they are supplying to a related party, normally of a semi-finished kind of a situation. My dear friend, then we have the fourth method, that is the profit split method. My dear friend, when this method will be normally being used, so say for example, there is two organizations, X Limited and Y Limited. They are related party and they are doing a single contract. So for example, there is a joint venture and they are doing both together. They are incurring the cost, now they want to share the revenue as well. So what will happen, that the X Limited is, say for example, in a particular jurisdiction where the tax rate is higher, and the Y entity is there where the tax rate is less. So what they will do, they will try to shift the profit to the Y Limited so that there will be the less tax impact on the overall transaction. So this is the case when the government authorities will be looking for that, okay, whether there should not be any artificially managed profit distribution. There should be I will say the true and fair way of distribution the profit among the joint venture companies or not, is something where this method will be normally used. So it has it has an own advantage and the disadvantage. So I'm not touching about the advantage and the disadvantage and the vis-a-vis the methodology, because the methodologies are more or less same. But now, my dear friend, here is the question, that there are the entities, the three entities are there. They are together doing a job. They are together doing a job, say for example, for 2 lakhs US dollar. And so they have their own equity way. I'm not discussing that. And they are distributing the revenue in a ratio of 1,50,000 and 50,000 US dollar. Whereas when they are increasing the cost, they are increasing the cost at the rate of 40, 40 and 20. So practically what is happening, that the BB Limited, because I am looking for a cost of a BB Limited, the arm length price for a BB Limited. So let us say there is a assessment going on for the BB Limited. So what will be the right arm length price for the BB Limited? The BB Limited, when increasing the cost, they are increasing 40%. But when they are getting the revenue, they are getting the revenue at the rate of 25% only. So which is not a right arm length price as per the norms. So what will happen, that in this case, kind of a scenario, I will also align the revenue with the cost incurred by the BB Limited, because there is a ratio. So I'm not discussing here about because when we talk about the Indian jurisdiction, so there is a judgment called Fakir Chand Gulati versus Uppal Agency by the Honorable Supreme Court, wherein they have defined that in case the true joint venture will be when you are equally sharing. Equally means 50, I'm not saying 50-50. You are equally sharing the cost, losses and the profit. Meaning thereby, if your profit is 25%, you are equally responsible for a loss of 25%. Then only it is a joint venture. In case the profit is, you are sharing only 15%, but the cost you are sharing 70%. Actually, it's not an arm length transaction. So that's why they have given this kind of a judgment in the Honorable Supreme Court. So similarly, I calculated that in case my cost is 64,000 US dollar, then my pricing should be, the revenue should be 80,000 US dollar. And accordingly, I have given the calculation that will be there. So my dear friend, because of the paucity of time, I'm just trying to rush all these slides. I believe that I'm trying to give you what you are looking for. My dear friend, the last methodology which is there is the net margin method. And the same way that, for example, you are dealing with a related party, you are saying that my profit margin will be 10%. But when you are dealing with an unrelated party, you are saying my profit margin will be 25%. So that is not allowed. You have to do the adjustment. You have to do the adjustment that, okay, you have to came at par with the party when you are dealing with an uncontrolled party. So this is the way that, okay, you will be doing a lot of, I believe that this is a quite simpler methodology, and the data will be available as well at the international level. My dear friend, these are the advantage and disadvantage and the steps, but let us move to the illustration straightway. In this case, the X Limited selling the bags of 20,000 units of bags, say for example for a 2 lakh US dollar, 200,000 US dollar as per the way you are speaking in the international level. So 200,000 US dollar and a white bag with a profit margin of 15%. But when the X Limited is selling the 50,000 units of black bag, now the white bag and black bag has a difference. Please try. And with a profit margin of 25%. So now, my dear friend, they have another condition that if you are selling more than 30,000 bags, you will be giving a bulk discount of 1% as well. So now the profit margin in black bag is 2% more as compared to white bag. So there are the two type of adjustment you have to do. Because the bag are different, black bag and white bag. So what you have to do with the 25%, you have to add the 1% and deduct the 2%. So practically the arm length profit margin will be 24% rather than the 25%. Vis-a-vis the profit margin you have claimed from your related party, that was only 15%. So what you have to do, that you have to adjust the arm length price by having this kind of a calculation. So what you have to do, my dear friend, what I will do, I will go with a cost of goods sold. 200,000 US dollar was my transaction value. What I will do, because I earned the 15% gross margin, so the cost of goods sold will come to 1,70,000 US dollar. And with that, I have to add the 24% margin, meaning thereby my right price, the arm length price will be 223,684 US dollar, meaning thereby my additional income as per the assessment will be $23,684, which will be added into the income of X. So my dear friend, this was the fifth and the last method, which is there into the legal formation vis-a-vis the international guidelines when you have to deploy one of the method. Now, my dear friend, the question will come that which method I have to follow. And in case I don't want to follow any of these 5 methods, then what is the remedy available to me? I have to sign off? Okay. So, which method I have to deploy in case of that I am not comfortable with any of these 5 methods. So, my dear friend, under your Article 34, because I touched upon only the 2 clause, the 3 earlier clause of the Article 34. The Article 34, clause 5 says, as being given, that whatever method you follow, you have to keep in your mind the few fundamentals. Number 1, that what is the contractual terms and terms of the transaction or the arrangement. You have to see the characteristics of the transaction, the economic circumstances, the function performed, the asset employed or the risk assumed, and then the business strategies employed. So, based on these 5 fundamentals, you have to see that which will be the best method I have to deploy with. Or in case I am not comfortable with any of these 5 methods, with this kind of a fundamental situation, then I can deploy the 6th method as well, based on my own way that, okay, my sir, this will be my arm length price based on this kind of a situation. Now, what will happen? The authorities will check, as being given under the subclause 6 and 7 and 8 and 9, that the subclauses will check the method vis-a-vis the circumstances, and then they will do the adjustment. And even they will intimate to the concerned assessee that, okay, I have made this adjustment of 23,000 US dollar into your income based on my calculation. So, my dear friend, there is a good point which is being given under the law, legal formation of your corporate law, that there will be the corresponding adjustment will also be required. Because what happened? The BB Limited, you increase the profit. Because you mentioned that, okay, your cost is more, so you have to have I'm just mentioning Uppal Gulati versus Fakirchand Gulati versus Uppal agency case. Meaning thereby, there will be the enhancement of the profit of a company A. Meaning thereby, there should be a deduction available to the company B as well. So, they have given in the clause 9 that whenever there will be this clause 9 and clause 10, the clause 10 says that wherever the authority will do this, they will give a corresponding benefit. So, there will be a benefit available to the corresponding party, that because we added into this income of A, certainly it will be a deduction available to Mr. B. So, that kind of a situation will be there. Whether there will be ultimately the neutrality of the situation will be there or not, will depend. Because where you are falling with, maybe you are in a free zone or vis-a-vis the taxable zone. So, the deduction will be available in a free zone, vis-a-vis the addition will be in the taxable mainland. So, there will be the additional tax one has to pay. My dear friend, this I covered, so that is there. And related party we have covered, so I believe that is again the slide came. And my dear friend, before I sign off on the technical part, I just wish to draw your attention that it is not only that we should be concerned about the related party. In your legal formation, there is a concept called connected person as well. Meaning thereby, when you are incurring any expenditure, say for example, Vishalji is paying, he's a director in a company and the company is paying the rent to him. So, he is a connected person with the company where he is the director. So, whether this expenditure is a legitimate expenditure or not and is an arm length price or not is something there as well. So, my dear friend, you should not be worried only about the 2 related parties. It is the company and the director also are the connected person, where also you have to derive out the arm length price. So, that's why I touched upon this particular aspect. So, my dear friend, I just give you 1 or 2 diagrams. Thanks to my colleagues for supporting me in developing this diagram. So, this is the way that one has to do this arm length documentation and the preparation of the report. So you have to do the mapping of the international transaction, do the industry analysis, analysis of the functions, risk, asset, and then select the appropriate method as being given in the slide stage 3. And then based on that, you have to do a calculation of arm length price, and finally your report will be ready. My dear friend, when you are doing this all documentation, again, you should do certain study, that you have to study an entity related, that the profile of the entity vis-a-vis the group, all the entities, whether they are in Dubai or outside Dubai, and then what you have to do, the price related analysis, transaction terms, functional analysis, economic analysis, as I mentioned you, the forecasting, budget estimates, and based on that, you should review the agreements, invoice, pricing related correspondence, everything, and based on that, you will be able to. Again, there is a replica of the earlier slides, which is being given, that how you will do. You have to do a preparation of a project plan, have the interviews, the questionnaires with the management, the discussion with the management, understand each entity, review the agreements, and then based on that, you have to search out the strategies, the local and the global database, analyze the internal comparables, and then you identify a right methodology you should be deploying. And based on that, you will be determining the billing methodology, existing costing mechanism, and finally, you will be able to achieve the transfer pricing documentation. My dear friend, this was all from my side. As the time permits me, the 40 minutes, so it's around 40 minutes only. There are certain aspects which are just released, the documentation part, and I believe that Chirag Bhai and others are dealing in that particular aspect, so I'm not touching upon. But these are only about the documentation, what kind of a documentation you have to maintain. So normally everything you have to maintain just to have the assessment, because today they are saying, somebody will say that you don't require this document, but tomorrow it may be required. For how much period you should maintain? Again, it's normal parlance that, okay, you should maintain for 7-8 years at least. So it will be there. So with this, I conclude my deliberation. This all I have covered. Maybe slides coming again and again. They want me to continue. But so this is all from my side. Thank you once again. Thank you again to Hari Bhai for giving this opportunity. And I believe that I try to justice the time given to me and the travel, that how we should take up, what is the right perspective of the transfer pricing, I try to deliberate upon. Thank you very much, my dear friends.
Thank you, Atul Bhai. Travel of 3 hours, and then he came here for 40 minutes of speech. I think we can give a round of applause for traveling 3 hours for 40 minutes speech for our members. That is his love for ICAI. Thank you, Atul Bhai. Thanks a lot. Now, to felicitate him, I will request Chairman, our Vice Chairman, Treasurer, as well as we have Central Council Member Raj Chawla ji. Please come on the stage to felicitate our Atul ji with a round. Anyone has any questions? Atul ji is available here. We will take the questions. We will take it because we are running short of time. वो questions हम यहाँ करेंगे जैसे time permit करता है, but पहले एक बार आगे बढ़ते हैं. Since all the speakers are here, we'll request all the ExCom members along with the speakers to come on the stage for a group photo. All the speakers, all the 4 speakers which we have along with Guruji and our ExCom members, please come on the stage for a group photo. ExCom थोड़ा जल्दी करते हैं. थोड़ा सा हम टाइम के अगेंस्ट चल रहे हैं तो थोड़ा सा हम फटाफट करेंगे. All the ExCom members who is available, please come, and all the speakers along with the Guruji. All the speakers to stay back. All the speakers to stay back. Only ExCom to go. I can see 2 past chairmen here. Raju sir and Naveen ji, please come on the stage for a group picture with the speakers. If I am missing any of the past chairmen, I think I have seen 2. Please come for a, just bear with us, a small picture, and then we'll move on to the next session. Thank you all. Thanks a lot. Thank you very much. Moving on to our next session. Ministry of Finance and Federal Tax Authority released so many cabinet, ministerial, and FTA decisions in 2023 that we believed a recap of the same is very essential. One thing which always bothered me is the difference between the words being used interchangeably. Cabinet, ministerial, and FTA decisions. Is all the same? While we all understand there is a difference between FTA decision and ministerial decision, I believe there is also a difference between cabinet decision and a ministerial decision. A little research I did, and the conclusion I have is this. A cabinet decision refers to a resolution or decision made by the UAE cabinet, which is the highest executive authority in the country. The cabinet comprises of ministers representing different government departments and is headed by Prime Minister or ruler of UAE. And that is why when you see a cabinet decision, it is undersigned by Prime Minister of UAE. While I go to ministerial decision, it is a decision made by an individual minister within their respective ministry. And therefore, you will refer all ministerial decision, it is undersigned by Ministry of State for Financial Affairs, His Highness Muhammad bin Hadi Al Husseini. So we have a difference between cabinet and ministerial decision. And to understand further what exactly these decisions comprise of, I will invite again Rishi on the stage to introduce our own member and speaker, C.S. Samir Popat, who will be covering decision number 5, 7, 37, 43, and 82. I leave it to you to decide which one is FTA, which one is ministerial, and which one is cabinet. Give a round of applause for Rishi.
Thank you, Secretary Saab, with your energy once again. Build the momentum very well. Ladies and gentlemen, I'm back on the stage with you again. So there is, one of the beauty of today's session is that chairman has selected very heavyweight topics. Like in the cricket, we have the heavyweight players. So today the topics are heavyweight topics. So this makes it even more interesting because, I mean, I know that when I read the law or tax law, there is always something which gets missed in the process. So when I go read the law, discuss again, it really makes me better. So hearing from expert, the beauty is they're very well prepared, very well educated, and they are actually doing that thing on a day-to-day basis. So we have very learned speaker with us, Mr. C.A. Samir Popat. So I'll just give a very brief introduction about him. He's a partner and managing the taxation department of Nadeem and Umendra Chartered Accountant. He has done CA over 12 years back and lots of experience since then. He has deep knowledge of UAE tax laws and conducted various seminars and webinars in the last 5 years. He has extensive experience in advising MNC in various tax laws in UAE. So without holding you much, please join me in welcome Samir Popat on the stage, please.
Hello and good afternoon, everyone. Thank you for the introduction, Rishi. And I would like to take this opportunity to, first of all, thank all the executive ExCom committee of ICI, the chairman Harikishan Rankawat, and also I would like to take this opportunity to thank all the past chairmen and the past executive committee who has brought our CA Dubai chapter to this level. And happy Mother's Day to all of you. Without taking much time, I would like to cover the agenda. Oh, sorry. Yeah, the agenda for today, I'll be covering, as Mr. Jai Prakash also said, I'll be covering the ministerial decision number 27 of 2023, which is on the provisions of a residential natural person. Then I'll be covering the ministerial decision 68 of 2023, which provides certain conditions of grouping all the business and business activities of government entities. Then the next is ministerial decision number 73 of 2023, which is small business relief and the conditions and the threshold for small business relief. Next is FTA decision number 6 of 2023, which is a small one, which provides the timeline for deregistration from taxation. And the last one is the ministerial decision number 83 of 2023, which covers the presence, when a presence of a natural person in UAE will not be considered as having a permanent establishment for a non-resident person. So it's quite complicated. And these are, as everyone is saying, these are very interesting times for CAs out here. so many ministerial decisions coming for different provisions of the corporate tax law, one relating to another. And there is cabinet decision, there is ministerial decision, there is the FTA decisions, then there is FTA guide. So it's happy time for us. And if being a tax consultant, I can have two languages. I can speak in normal language, or I can speak in the language of the law. So for example, I can say, I comply with provisions of Article 2, 3, 5, and 6 of Ministerial Decision number 27 of 2023. Read along with the provisions of subclause A and B of clause 3 of Article 4 of Cabinet Decision number 85 of 2022. And the client will be like, "Arey bhai, kya bolna chahte ho? I took it from you." So any guesses what I'm trying to say? No. This means that I am just a resident person in UAE for tax purposes. But these are the clauses that gives the effect to it. So that's how the tax scenario in UAE is getting complicated, and it's, again, a fun time for us. So now I will start the first ministerial decision, that is Ministerial Decision number 27 of 2023, which speaks on the determination of tax residency for natural person. It is clarification on the certain provisions of Cabinet Decision number 85 of 2022, which was on determination of tax residency status, and it is effective from 1st March 2023. So for us to understand, I'll just close. So for us to understand the Ministerial Decision number 27, which speaks on Cabinet Decision number 85 of 2022, we need to first understand what are the highlights of, the Cabinet Decision number 85 of 2022. So first, it is for the determination of tax residency for natural person and for the juridical person. So it provides the conditions of how a company or a juridical person will attain a tax resident status in UAE. So there were two conditions to it, one being if the company is incorporated or recognized by law in UAE as a company, it will be tax resident, and the second condition was mentioned about if it is a tax resident as per the prevalent tax law in the country. Next were provided the conditions for natural person. For a natural person to be resident in UAE, what are the conditions that needs to be fulfilled? We'll be taking that in next slide, because the Ministerial Decision number 27 of 2023 is relating to the conditions of the natural person. And finally, it was for the application of tax residency certificate. So as per Article 4 of Cabinet Decision number 85 of 2022, a natural person is a resident natural person in UAE if he qualifies for any of these three conditions. First being, if the natural person has a usual or primary place of residence inside UAE, and his UAE is the center of financial and personal interest for that person. Now these two, what is a usual or primary place of residence, and what does it mean by having a center of financial and personal interest? These are defined in the Ministerial Decision number 27. So we're gonna look at that later. The second condition for a natural person to be a resident natural person is if he is physically present 183 days or more within 12 consecutive months, which is a simpler one. And the last one is if he is physically present for 90 days or more within 12 consecutive months, and he is a UAE national or holds residence visa or holds nationality of any GCC member country, and he has a permanent place of residence in UAE or has employment or business in the UAE. So these are the three conditions how you can become a resident of UAE as per the Cabinet Decision number 85 of 2022. So now we are just going to take a look at what do you mean by usual or primary place of residence. So that has been defined under Ministerial Decision 27 of 2023, Article 2, which says that if a person will be considered as, having a usual or primary place of residence in UAE if he is habitually or normally resides in UAE. And they have again further defined what do you mean by having habitually or normally residing in UAE is if he spends most of his time when compared to any other jurisdiction as part of a settled routine and in a way that is more transient. So it's very subjective. And in the ministerial decision also, they say that these factors should be taken into account while considering the residency status of the person. So it's not, hard and fast rule that, okay, if certain conditions are, they are taken care of, then they will be getting the residency. No, it is very subjective, and the person issuing the residency status or the tax residency certificate needs to take into factor these factors. Next is the center of financial and personal interest. Again, Article 2 of Ministerial Decision number 27, 2023, it says, if a person has a personal and economic interest, and they are the closest in UAE and are of great significance, and again, the factors such as occupation, familial and social relations, cultural or other activities, place of business, place of administration, of property, and any other relevant factors should be taken into account while issuing the tax residency for a natural person. Next, we are going to look at the permanent place of residence, which was in the, if I want to go back, yeah, here. In the third condition, wherein if the person is present physically 90 days or more, then he has to have a permanent place of residence. So what constitutes a permanent place of residence? And what constitutes of having an employment? So these are the conditions. So a person will be considered to having a permanent place of residence if he has furnished house, apartment, room, or any other form of dwelling which is continuously available to him. And it's not that, okay, a hotel booking which is only for limited days. It is continuously available, and it's not necessarily to be owned by him. It can be rented as well. So if you have that, if you have a rented apartment in UAE, it can be considered as you are following the condition of having a permanent place of residence. Next is the employment. For employment, you can it can be satisfied by either of the two conditions. The first condition being if you have a contract with a resident employer to offer service under the supervision of that employer, and you are being paid the remuneration inside the state. And the second condition, if you are in UAE and you have a contract where substantially all of your income is received from one party for the labor that is or the service that will be provided in the state. The contract can be limited or unlimited, and it can be for part-time or full-time basis. If it's there, then you qualify that of having an employment in UAE. So that was Ministerial Decision number 27 of 2023. Now we are moving to the next one, that is Ministerial Decision number 68 of 2023. It might not be more relevant to all of us. It's relating to the grouping of all business and business activities of government entities. They have segregated government entities into two, one being the federal government entities and another one being the local government entities. And they can group all the business and business activities as a single taxable person. The start and end dates for treating as a single person will be, the start will be when the tax period which is mentioned in the application, that will be the starting tax period. And the end tax period will be similar in the application. If it's mentioned that this will be the tax period, well, it will be diluting or dissolving all the activities. Then that will be the date. And the taxable income of the single person. So once it is grouped, all the business and business activities will be considered as one taxable person, and the consolidated financial statements will have to be prepared by, removing the or giving the adjustment entry for intra-group transactions. So what are the conditions for grouping? Application has to be done by a representative federal government entity to FTA and shall include all business and business activities, and all entities under grouping should have a license issued by the licensing authority. So this is for the federal government entities. Next, for the local government entities, the conditions are similar, but there is one more additional condition wherein it mentions that all entities, business activities for a local government should be confined to one emirate. It should be in the same emirate. Next is Ministerial Decision number 73 of 2023, which is relating to the small business relief. a business or a taxable person can apply for small business relief if the revenue for a particular tax period and subsequent tax period starting after 1st June 2023 is equal to or less than 83 million. So the relief is for the, if you are eligible for this relief, it means that your taxable income for that particular period will be considered as zero, so you don't pay any corporate tax. But it does not mean that these businesses will not have to register for tax or not file the tax return. So even if your revenue is less than 3 million, still you will have to register for corporate tax and file the corporate tax return. So this small business relief is valid up to 31st December 2026. That means it will be 3 tax periods for companies who have financial year ending on or before 31st December 2026. And it will only be 2 tax periods for financial years that are ending after 31st December. So if any company is having a financial year from April to March, they will have this small business relief for only 2 financial years, because their 3rd financial year will end after 31st December 2026. Revenue to be calculated as per the applicable accounting standards. The small business relief is not applicable to companies that are part of an M&E group and also to a qualifying free zone person. Tax losses cannot be carried forward. Also the interest expense, excess interest expense cannot be carried forward. And general anti-abuse rules will be applicable for artificial separation of business. So in case if you are thinking, okay, my revenue is around 10 million, let me have 3 companies and I'll split the revenue of the company. So that won't work. If the FTA feels that you have artificially segregated your business, it can club all the businesses into one and apply the corporate tax. So what points you should consider if you're a small business and if your revenue is around 3 million or less? What are the points that you need to consider? First of all, I just clarified that registration will be mandatory. So if you're thinking, okay, my business revenue is less than 3 million, I don't need to register for corporate tax. No, there are only 5 categories of entities that have been exempted from registering for corporate tax. Rest everyone has to register. So that means even small business relief, if you want to apply, you will have to register your business and you will have to file the corporate tax return, filing of the corporate tax return. Secondly, you need to thoroughly consider, are you recording revenue for the company correctly? So sometimes there are companies who are providing service to others, and as part of providing that service, they procure some some additional services. And do you consider it as part of the revenue for recharging of the expenses or for the disbursement of expenses? Are you considering that part of the revenue because of which you are not able to take benefit of the small business relief? So that also needs to be taken into consideration. You need to analyze your books now and see what goes into your revenue and should it really go into your revenue or no. Will you be making taxable losses in the relevant period, in the relevant tax period? If yes, then why bother applying for small business relief? Because you can carry forward the tax losses that you have made in the future when you are going to make taxable profits. Do you have any interest expenditure in the company? And if yes, will it be required to carry forward to next period? So there is a cap on interest expense, which is 30% of the EBITDA. So if you have interest expense for a tax period, and which is more than the 30% of your EBITDA, if you apply for small business relief, you won't be able to carry forward it. So it's better not to apply for small business relief and do with the normal registration and carry forward. You get the opportunity to carry forward the interest. Is your taxable profit for the relevant tax period more than 8375? If no, then again, it doesn't make sense to apply for small business relief. So these are some of the factors or points that you need to consider regarding the small business relief. And next is Federal Tax Authority Decision number 6 of 2023. This is relating to the timelines for deregistration for the corporate tax. So it is effective from 1st June 2023, obviously, because corporate tax is effective from 1st June 2023. And the timeline for filing of deregistration for corporate tax for natural person is 3 months from the date of cessation of business or business activity. And for juridical person, legal entities, for companies, the timeline, you need to file deregistration application within 3 months from the date of entity ceasing to exist, cessation of the business, dissolution, liquidation, or otherwise. Now, this is the point which is not related to the topic, but FTA needs to be, this is my personal feeling, FTA needs to guide different licensing authorities that the prior NOC should be taken from FTA before the company is liquidated. So if a company ceases to exist, why it would bother to even file for deregistration? Maybe somebody is going to home country liquidating his business. If he is already liquidated by the licensing authorities, he won't bother and go to FTA to file for deregistration. So this is a topic for different discussion, but it should be noted that FTA, an NOC from FTA should be mandatory before liquidating a company. Last is the ministerial decision number 83 of 2023, which provides the conditions under which the presence of a natural person in the state would not create a permanent establishment for a non-resident person. Now this is quite detailed, and to have some background regarding this, we need to again look at the corporate tax and the conditions of having a permanent establishment for a non-resident person. So I'll first try to cover that. So as per corporate tax article 14, a non-resident person has a permanent establishment in any of the following instances. First, if it has a fixed or permanent place in UAE through which it conducts business or business activity. Second, a person habitually exercises authority to conduct business or business activity on behalf of the non-resident person. This is in the case where the non-resident person or a foreign company has an agent or a representative in UAE, and he conducts and concludes all the business without much interference from the foreign company. And the last is, if a nexus is there, if a foreign company has any nexus, any connection in the state, in the UAE through which it conducts business, but what will form a nexus, what kind of arrangements will form a nexus, we'll have a cabinet decision specifying it. So we saw the first point which says fixed or permanent place in UAE. So what is fixed or permanent place in UAE? So that is defined by clause 2, article 14 of the corporate tax law, which says a place where management and commercial decisions are taken that are necessary for conducting business. Any branch, office, factory, workshop, building, any other real estate property, if foreign company or a non-resident person has inside UAE, it will be considered as having a fixed or a permanent place in UAE. Then next is installation or structure for the exploration of or renewal of non-renewable natural resources, mine, oil or gas well, a quarry or any other place of extraction, including vessels and structures, any building site, construction project or place of assembly, installation of supervisory activities for at least 6 months, including connected activities by one or more related parties. So all of these will be considered as having a fixed or permanent place for a non-resident person. Now there is one more clause 3, which says that clause 2. So the clause 3 says a fixed or permanent place of non-resident person shall not be considered if it is used solely for any of the following purpose. So if a non-resident person is only storing, displaying, or delivering of goods or merchandise, or if it is keeping stock of goods or merchandise for the sole purpose of processing by another person, purchasing goods or merchandise, conducting any other activity for a preparatory or auxiliary, preparatory or auxiliary nature, then, or any combination of above activities, then even after having a presence in UAE, for a non-resident person, it will not be considered as having a fixed or permanent place of establishment. Now this is all as per the federal decree law. Then there is one more clause, clause number 7, which states that for the purpose of clause 3 of article 13, which gives the exemption of storing, if you have a storing, or you have a construction site. So for the purpose of clause 3, this one, mere presence of a natural person will not create a permanent establishment for a non-resident person in the state if such presence is a consequence of temporary and exceptional situation. And second is where the natural person is employed by the non-resident person and the activities are conducted are not part of the core income generating activities, and the non-resident person does not derive state-sourced income. So you can see that the ministerial decision next that has come, the ministerial decision number 83 of 2023, is to specifically define what will be a temporary and exceptional situation for a natural person to be inside UAE, which will not consider as having a P for a non-resident person. So the presence of ministerial decision number 83 of 2023 provides certain conditions which will be considered as presence of natural person to be temporary and exceptional situation only. One being the presence is a consequence of exceptional circumstances of public or private nature. Now they have gone ahead and defined this as well. In the next slide I'll share. The exceptional circumstances cannot be reasonably predicted by the non-resident person or the natural person. The natural person did not express any intention to remain when the exceptional circumstances end, so he's leaving once the exceptional circumstances have end. The non-resident person does not have a P before the occurrence of the exceptional event. And the last one is the non-resident person did not consider that the natural person is creating a P or deriving income in the state as per the tax legislation applicable in their jurisdiction. So first being the exceptional circumstances of public nature. There are two types. One is public and the private. So the exceptional circumstances of public nature can be adoption of public health measures by competent authority in the UAE or in the jurisdiction where the natural person is resident, or the World Health Organization, or imposition of any travel restrictions by competent authority in the UAE. We all know what happened during COVID. A lot of people were stuck. If the management is stuck of a foreign company is stuck in UAE due to COVID, it does not mean that he was here to do business and you cannot tax the income of that foreign person. So that's the logic behind it. So that is why these exceptional circumstances have been given. So imposition of travel restrictions by competent authority in the UAE or in the jurisdiction of the original workplace, imposition of legal sanctions on the natural person if any, acts of war or occurrence of terrorist attacks, occurrence of natural disasters or force majeure, and any other circumstance similar to above as prescribed by the authority. So maybe there is one more FTA decision coming up on this, I don't know. Next is the exceptional circumstances of a private nature. So if a natural person has an occurrence of emergency health condition affecting the natural person himself or any of his relatives up to the 4th degree, including the way of adoption or guardianship. And again, similarly, here it is mentioned any other circumstances similar to above as prescribed by the or may be prescribed by the authority. So if it is exceptional circumstances, then it will not be considered as a P for the non-resident person. So that's the basic crux of this particular ministerial decision. And that's all from my side of the 5 decisions that I was supposed to cover. And once again, I would like to thank all the committee members and all of you for spending time and listening out to me here. Thank you.
Thank you, C. Samir, for summarizing the decisions so well. And now I'll request our chairman, our vice chairman there. I have seen Raju Menon, sir, our past chairman. And Malvika, are you around? Yeah, Malvika, come on the stage to felicitate our own member, C.A. Samir. I love when our own members comes on the stage and presents it. That shows our growth story. A round of applause for Samir Popat for taking the stage and addressing the entire auditorium. It's time for our next session. It's time for some yoga. Some tips to keep ourselves healthy while we are busy with corporate tax. Because corporate tax to ho gaya, baki yoga se hi hoga. It's my great privilege to introduce you India's one of the most renowned yoga guru, Yogacharya Sri Dhakaram ji. Sri Yogacharya Dhakaram ji started his journey of yoga in the year 1989. When he met a very famous yoga guru, Sri S.K. Jindal Guruji, and with his blessings, Sri Dhakaramji excelled in yoga. In the year 2006, Dhakaramji started his own yoga institute called Yoga Peace in Jaipur, India, which is now Yoga Peace Sansthan. He had a vast 30 years of experience in yoga and yoga therapy. Please put your hands together. He's already on the stage. Welcome, Guruji. And now the stage is for you to teach us something which we can do sitting on our place. You will need a chair. And a mic. Mic I can arrange for you. Sanjay ji, I need a chair help. Yes, I can see that chair. Can someone help Malvika? Yeah, yes, please. One of you. Thank you very much. That helps. You came to our rescue. Please come.
You in the back?别怕，小梦。
हरिओम। आप सभी को हमारा मुस्कुराता हुआ नमस्कार एंड बहुत बहुत धन्यवाद परमपिता परमेश्वर का, थैंक्स गॉड एंड द इंस्टीट्यूट ऑफ चार्टर्ड अकाउंटेंट ऑफ इंडिया दुबई चैप्टर का बहुत बहुत आभार एंड ऑल्सो बहुत बहुत आभार नवीन भाई जी और हरि कृष्ण भाई जी का, जिन्होंने आज मौका दिया। मैं यहाँ आया हुआ था। कहते हैं ना योगा से ही होगा। फर्स्ट ऑफ ऑल वेरी सिंपल, वॉट एवर वी डू इन आवर लाइफ, वाई वी आर डूइंग एनी काइंड ऑफ वर्क, इफ वी आर डूइंग व्हाट्स द रीजन वाई वी आर डूइंग एनी काइंड ऑफ वर्क? फॉर हैप्पीनेस। इज ट्रू और नॉट? Any kind of work, we are doing happiness, and the meaning of yoga is happiness. Just we will start this session, just 15 minutes, with Om chanting, because Om chanting is a universal sound. Which sound? It's a universal sound. Then child start to say something, they are, oo and ma. So Om is a universal sound. So we will start 3 times Om chanting. I requested everyone sit straight and just say Om chanting. Now, inhale your breath, close your eyes, and inhale breath smoothly. Smoothly open your eyes. मैं सीधे टॉपिक पे आता हूँ, come back in topic. So which kind of problems mostly CA facing? Mostly we are sitting all around 8 to 10 hours every day. If you sit continuously very long, which kind of problems we will facing? Like back pain, like neck pain, like shoulder pain, that kind of, and another is stress also. So first of all, I want to one thing. I think everybody drive the car. That car has got a 4 wheel. How many wheels? So think 1 wheel is down and 3 up. एक tire नीचे और 2-3 tire ऊपर. So what will happen in that car? We can drive easily. We can drive easily. Why? Because alignments are not good, that's why the imbalance. If people drive, chances of accident increase, chances of accident are there, accident के chances बढ़ सकते हैं, and they want to maintenance a lot. That's why how we are sitting, that's very important. You know my name is Bangladesh की राजधानी से ढाका, दशरथ के बेटे राम से ढाका राम, it's my name. Okay. So I was watching everyone when we are sitting, I think it's a very height, so when we are sitting like this one. It's very comfortable, John. And sometimes we're sitting like this one. It's true or not? When we sit like this, what will happen in your buttocks? If you see, when you sit like this and more buttocks on another buttocks. If I sit like this, my left hand up and right down, in this condition, more weight on your right buttocks. If you sit like this, and this time, left buttocks, so what will happen in your body? Your body alignment will be disturbed. And after sometimes convert the backache, sciatica, knee pain, different kind of problems. So I want to say, if you sit like this, so don't sit like this, always keep your leg like this one, because my chair are very up, otherwise I'll show you how we can sit. Second, when you sit like this one, very comfort zone, what will happen in your body? See, your lungs is compression, you know. When you sit like this, just feel the difference, your lungs will be compressed. Aapka lungs सिकुड़ जाता है, your heart also compress. It means we can't take oxygen properly. हम सही प्रकार से श्वास नहीं ले सकते. If you won't take श्वास properly, breath properly, what will be happen? Some breathing issue, heart issue like low blood pressure, high blood pressure, and that kind of things also. So I am always saying sit straight, keep your chest broad like Hanumanji. What I say? Hanumanji, we can say He-Man. So when you sit like this, sit straight like this one. Sit and see the differences. Just see the differences. Now your breath is, I need this kind of chair. We have got small chair because they're already height. So I'll show, because I want to say practically, when you sit like this, it's a comparison. When you sit like this, feel the differences now. What's your breath now? See, is better or not? It means if you breath deep and long, your mind become a calm and peace. If your mind become a calm and peace, your breath should be deeper and longer. So when you sit like this, automatically breath will become more oxygenation in your lungs. So just see from today onward, whenever you sit, because the habits are very difficulties, क्योंकि हम इतने समय से बैठते आ रहे हैं, we can't change our habit. But try to change your habit whenever and whatever time, if you will sit, जब भी आप बैठें, how will we sit? Always concentrate your chest. It expand or not. समझ में आता है आपको? अगर आप अपने चेस्ट का ध्यान दें, आई एम श्योर आपको कंधे का दर्द या गर्दन का दर्द नहीं होगा. And it's okay. Bring. Thank you. I make 3 videos especially for how to sit properly. How to sit on the chair, how to sit on the sofa. This is very important. So when we sit like this, and another way, when you sit like this one, your lumbar is compressed. Lumbar is compressed. Compressed, compressed, compressed. Another day, slip discs, backache problems. So whenever you will sit, when you sit, always keep your knees down from your buttocks. Wherever, if you sit, you can sit on the sofa, you can sit on the chair, you can sit on the stone. That's not important. Important is how we are sitting. There are very simple rules are there. You should apply your life. मैं बोल रहा हूँ उसको मान, it's not true. You should realize yourself. अपने आप महसूस करिएगा. Now do one thing. Just come corner of the sofa. Keep your knees a little bit down and feel the differences like this. Now do one thing, because your legs should be crossed, and sit and feel the differences now this. Feel it, everybody do it, then feel. Just come on the corner, cross the legs, because if you keep like this, what will happen is comes up. Mostly in corporate, another day, one sister comes with me, Guruji, I want to talk with you. He's sitting like this one. We are, God, I make a beautiful. male and female, but we are, हम अपने posture को क्या कर रहे हैं? Changing like this. What will happen on your spine? What will happen on your shoulder? And then they become a shoulder pain, neck pain. So I requested, just change the habit, sit like this, keep your knees down from your buttocks. It's a simple rule. You can keep a safe your lower back and upper back. And second, when you sit like this, your chest becomes broad automatically. एक बार आप ऐसे बैठ के देखिए, feel your chest and lungs. एक बार ऐसे बैठ के देखिए, feel your chest and lungs. What's the difference are there? We are watching the mobile. What will happen? Be inviting the cervical. Please come. And frozen shoulder. So if you want to look, because we are a wonderful world, digital world, we can watch like this one. It's very beneficial for you. So what will happen, I give me very small tips are there. Now, just interlock your fingers like this, okay, and keep your back side. Mostly you can see how our shoulders, they always keep like this one. See, it's this one. Then keep your chest broad like He-Man. Don't leave, continue. Just 1 minute, not more than. More expand your chest like Hanumanji, like He-Man. Show, yes, more. Yes, expand your chest more. Just 1 minute, not more than. And if the difference is, just 20 seconds now. Thoda sa aur. Little bit more expand. Yes, very good. And feel the differences. Close your eyes. Concentrate your trapezius muscles. Scapula, shoulder blade, your chest, your ribs, concentrate. More expand. Okay, now relax. Close your eyes and feel the differences. What do you feel? Kaisa laga? Just 30 seconds we have done. But it's not perfect. So, issa se alignment of the neck and shoulder. In an office, you can do whenever you feel tiredness. जब भी आपको लगे मैं थक रहा हूँ या थक रही हूँ, and we are sitting like this continuously, our body posture is going to bump like this. So just for 1 minute, we will do again. अभी 1 minute हुआ नहीं था. We will do again. Then expand your chest. Look at me. Our target may be expand your chest maximum. हम कहते हैं ना गर्भ से सीना फुलाया, expand your chest bit proudly. Or I am saying without proudly we can expand the chest. But you are doing wonderful work with the Institute of Chartered Accountant. हमारा छाती फुला ही रहता है because you are looking the finance. You are wonderful peoples. Okay. So we will do again. This time just 1 minute and 30-second observation. When I talking about a yoga, if you don't open your, if you open your eyes and look each other, like your guys, friends, that's not a yoga. Yoga means concentrate yourself. How's my shoulder? How's my trapezius muscles? How's the scapula? How's your chest? Just focus your shoulder. आपको करना है, if you really want to feel something, just do honestly, and I feel a difference is within 2 minutes, you feel very relaxed. Your shoulder, your neck is very important parts. Can we try? Just 1.5 minutes, okay? Now interlock your fingers. Back side. It's very nice. Now keep your chest broad. Close your eyes and concentrate. People do just 1 minute, not more than. Don't think I can't do more. No need to do more. Just do on your own capacity. Is very nice. Thoda sa aur close your eyes, everybody, my lovely friends. Close your eyes. Concentrate your shoulder. Try to expand more and more and more. It's a wonderful moments for your shoulder and neck. वो सभी चाहते हैं कंधा मेरा मजबूत. Everyone wants to make a strong shoulder. Just 15 seconds more. More expand. Little bit more. Yes, just 10 seconds. Don't open your eyes. Lovely one. Just 5 seconds. And then finally expand more, 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 more. And release your hands without opening your eyes. Release your shoulder without opening your eyes and feel a difference. Before and now. Don't open your eyes. Lovely. Friends. Concentrate your shoulder, your chest, your upper back. Now gently open your eyes. What do you feel? Feel good or not? Please sit on a place. It's the simplest moment, जो मैं आपको 15 मिनट में दे सकता हूँ. The simplest moments are there. Wherever, it's a whatever time we can do, morning, evening, afternoon, at night, and wherever we can do. There are no options. You can do in your office, in your bathroom, in your kitchen, wherever we can do and take our benefits. If you open your eyes, it's not good. Just concentrate. Just 2 minutes, 1 minute, hold the posture, 1 minute observation, okay? Now second, if you meet someone, if they looks like this, you want to talk with them? I told you meaning of yoga is happiness. Meaning of yoga? Happiness. So whatever we do, we are doing a wonderful work. What we want? Happiness. Is true or not? What will happen after happiness? What will happen after happiness? After happiness become a smile. After happiness become a smile. Smile's your own property. Smile your own property. Don't miss this. So always smile. That's very important. If you smile yourself, these wonderful results will be achieved. So you know how to laugh? Do you know how to laugh? आपको हंसना आता है? मैंने सुना नहीं. So today people laughed loudly. Then uncontrolled. Okay, we will laugh loudly and uncontrolled. Whenever you feel stress, tiredness, you can laugh yourself. You can laugh yourself. So we will do a little bit meditation. Ara is smile meditation. Which meditation? Okay, can you take 10 minutes more? No, okay. 5 minutes, okay? So we will laugh loudly. So if you laugh somewhere, people are saying, why you are laughing like you mad people? Saying or not? If you meet somewhere, they are asking, why you are laughing like mad people? But I want to say, no life without laugh. Then on video in my YouTube channel, no life without laugh. When you do Dhaka Rama, Yogacharya in YouTube, no life without laugh. मैं ऐसा कहता हूँ, I want to say, no life without laugh. But people are not saying. So I'll give a one key. किसको चाहिए चाबी? From today onward, whenever you want to feel breathless, stressed, depression, unhappy, just you can open the key and laugh yourself. You want to do that key? Who want to key? Raise your hands. Okay. Harikishan ji, bhai ji, can I give a key? Okay, now very nice. So we will laugh loudly and uncontrolled till you're starting to pain in your cheek and your stomach. Okay? We will laugh loudly and uncontrolled till starting to pain in your cheek and abdomen. But why? Why should we laugh? Tell me. People are selfish. They are asking why you are laughing like mad people. But I give a key. In millions and trillions people comes this universe, and millions and trillions people passed away. खरबों लोग इस दुनिया में आए, खरबों लोग, and खरबों लोग, billions and trillions people, like you and me in this universe, and another day people will go, passed away. You know what will happen in next moment with us? आपको मालूम है? अगले ही पल में हम लोगों के साथ क्या घटना घटने वाली है? We don't know, unknown, because we suffered the COVID. That's why I told you millions people past, future, now, but nobody like me. What do you say? I'm a unique this universe. I'm not talking about me. Keep your hands, everybody, in your cheek like this one. Keep your fingers here. Everybody say, I'm a wonderful man this universe. What do you say? All females say, I'm a wonderful lady in this universe. I'm 100. If you find out your kind of guys, if you will come with me, I'll give out 1 crore rupees. If you find out you kind of guys, we are always looking other people, and I'm saying, look yourself. Because God make us is unique, nobody like me. So we will laugh loudly, just 1 minute. After that, we close our eyes and feel a laugh with close your eyes. People are saying laugh for other people, and I'm saying laugh yourself. Because I'm a unique. Okay? Start laughing. Look each other and laughing full. Look each other, laughing, look each other, laughing more and more because you are a unique. Yeah, we will look the mobile later on. Okay, I laugh with you. हंसी हंसिए ऐसा मौका नहीं आएगा laugh more and more because this moment never will become मोबाइल बाद में देख लीजिएगा अभी मोबाइल की छोड़िए आई एम लाइव हियर laughing more ऊपर से आवाज नहीं आ रही है now close your eyes इस wonderful moments देखिए जय किशन भाई साहब मैंने कहा आंखें बंद you are stopping the laughing continue with close your eyes laugh yourself not other don't look each other you all are unique आवाज नहीं आई मुझे सच्ची बोलता हूं I am listening little bit less laugh more and more with close your eyes everybody is looking for other people I am saying look laugh yourself when you feel tiredness when you feel tiredness in your cheek and stomach just give a peace just silence pin drop silence are there backbone straight keep your chest broad with a smile smile has got wonderful energy because whatever we are doing we want to happiness and after happiness become a smile that's why a smile is very important your smile is very important just smile yourself just smile yourself not other from today onward always a smile moments nobody you can say wonderful man this universe God always bless like this God always bless like this and God always bless like this thank you gently open your eyes धीरे धीरे आंखें खोलें thank you very much for everyone keep a smile every moment in your life from my side always God bless like this and always God bless like this and always God bless like this it's a very simple techniques you can apply first of all how to sit I think change your sitting habits and if you feel differences laugh yourself not other whenever you have got time laugh but smile always because we can't laugh everybody every time but we can smile every time I'm 100% sure जो आप काम सोचते हैं 10 दिन में होगा they can do within 7 days if you do your work with play if you do with a smile your work will be very easy और काम नहीं भी हो तो भी I'm smile always तो people are thinking ये करने के बाद मजे करूंगा and I'm thinking अभी से मजा करूं तो क्या बुरा है understand तो हर पल को जिएं, मस्त रहें, आनंदित रहें. और you can like me in YouTube channel and any social media. The smallest video, how to sit, how to stand, how to bend, how to walk is different videos. You know my name? बांग्लादेश की राजधानी क्या है? और दशरथ के बेटे ढाका राम. Thank you very much, नवीन भाई साहब, किशन भाई साहब. Thank you very much.
Round of applause for Guruji. You have explained your name in such a way that we will remember for all our years. Dhaka Ramji, Sir Guruji, thank you very much. And this yoga, please practice. It will be useful in your life. Thank you very much. Thanks a lot. Mani. Laughter has very important energy, something which I always thought, and you again re-emphasize that, yes, smile, because that carries a lot of energy. So smile, I smile always, and let's move on back to corporate tax, which is important. This is the last month which we as UAE residents are seeing the country as tax-free country. And this may never return again. So we all now get a place in history that we were the last human lot which witnessed and saw UAE as tax-free country. And let's be proud of that. From next month onwards, corporate tax will be a life. And it's time to learn implementation strategies for both corporate tax and transfer pricing. Though our speaker is already standing, but before she takes the stage, I will humbly request our ex-com member Ashna to come on the stage and introduce our next speaker, Ms. Seetal Sapra, to all of us. A round of applause. Smile nahi to taaliyan hi sahi.
Abracadabra. Transfer pricing makes an accountant feel like a magician. How? It's like pulling a rabbit out of a hat, except that rabbit is your profit and that hat is the arena of a web of international tax laws. With all these recent ministerial decisions on transfer pricing, it has created a wave of discussion. And who can better solve it than an expert? Ms. Sheetal has more than 6 years of experience in transfer pricing in Middle East, Netherlands, and UK, and focusing on clients across a wide variety of industry verticals. She is well-versed with global transfer pricing policies, issues, and approach of the Foreign Tax Authority on the key transfer pricing issue. Without taking much of your time, let us welcome Sheetal Sapra.
Thank you, Ashna. So, hope you all are relaxed now after Guruji's session. So, first of all, thank you so much, ICI Dubai chapter, for giving me an opportunity to host this session. So, my session, as you would see on the screen, is more about tax and transfer pricing implementation considerations in the purview of the UAE tax regime. Yeah, just use this one. Okay. So I'll just start off with refreshing certain basics, which I'm sure that you all be knowing already. So the corporate tax rate in the UAE is at the rate of 9% on your taxable income. And there is a threshold also of 375K dirhams, or which is your $100,000. So if you have a taxable income equal to or more than this amount, your tax rate would be 9%. And if you have less than that, it would be 0%. Then moving on to on whom the corporate tax is applicable. So it is applicable on taxable person. A taxable person could be a resident person or a non-resident person. Resident person meaning any legal entity which is incorporated in the UAE, or any natural person like you and me. So if we are buying and selling a lot of properties in the UAE, so will that be covered under the purview of corporate tax? But we don't know yet. So let's see what's coming in the future. And last but not least, any entity which is deemed, which is effectively managed and controlled from the UAE. So it would be a deemed tax resident here in the UAE. Now, if we talk about non-residents, so that would be your permanent establishments or any non-resident which is having a business nexus in the UAE. So we don't know what is the meaning or definition of this word business nexus. So we are still awaiting for certain clarifications from the UAE ministry. Then the corporate tax in the UAE would, as you all know, that it would be effective from 1st of June 2023. So it is just next month. So if any of you are having your financial year end as December 2023, so your first year of your tax applicability would be 1st of January 2024. So I think all of you should start thinking about the corporate tax regime and everything, your transfer pricing from right now. Okay, so the administrative authority who would be governing the corporate tax here in the UAE would be your FTA. And if you see on the right side of my screen, I have compared the corporate tax rate in the various Middle Eastern countries. So if you see KSA, Qatar, Oman, Kuwait, UAE is still the lowest and the most competitive at the rate of 9%. So as you all know, Dubai is all about doing the A's of business, and it's also in line with the vision and the mission of His Highness in Dubai. So that's a brief overview. The overview here I gave is because just to set the stage, and also it is very, very important to set your basics right just before moving on to any implementation considerations. So, okay. So here in the next slide, I have just listed out certain factors which should be kept in mind while considering a tax implementation from a corporate tax and a transfer pricing perspective. So for our clients, whenever we just talk about corporate tax or transfer pricing, we always start with reviewing their legal structure and management structure. So why the review of legal structure is very, very important from a corporate tax perspective? Reason being, from a legal structure, you would know that is there a possibility of forming a tax group from a corporate tax perspective? And also, there is a 95% shareholding criteria from the parent for all your operating entities. So we can assess whether the companies can form a tax group or not. And then we assess the management structure. So we ask our clients, give us your management structure. But why? Management structure will tell you that where is the substance in the group or in the UAE local taxpayer. So where the key managerial people sit, where is the CEO, where is the CFO, where they are based. So now moving on to groups, UAE business operations and financial position. So it is very, very important to understand the group's business, and it is also very, very important from a transfer pricing perspective. Reason being, transfer pricing is very, very subjective. So, and it's all about substance per se. So transfer pricing will focus where is your substance, what is the roles and responsibilities. So it's very, very important for us as consultants to understand our client's business. And also the financial position of the business is also very, very important because, for example, you might have heard of the word limited risk distributor. If any of your entities is characterized as a limited risk distributor and that limited risk distributor entity is making a loss, so it raises a red flag in my mind, but because limited risk distributor always get a targeted return and generally they don't make any losses. So that is what we think and see these kinds of questions. Now, next point, we evaluate the expenses. So there's an exhaustive list which is provided by the FTA, what is allowable, disallowable. So, well, if you talk about your expenses, it is generally, you know, all your expenses which you have incurred for your purpose of the business, solely and exclusively. Principally, they would be allowed and deductible for computing your taxable income. Lastly, which is reviewing your transfer pricing thing, which is last but not the least, of course. So here we will see that whether the group is complying with your arm's length principle, which is Article 34, which is already explained very clearly by my previous colleagues here. So on my right-hand side, I have just listed some key articles in the law. Of course, there are a lot of them, but I think these are the key ones, and we should really understand them very thoroughly to do a corporate tax and transfer pricing implementation analysis. So if you start with Article 54, which is financial statements and audit requirements, so it basically focused that any taxpayer or a qualifying free zone person who is having a revenue of more than 50 million dirhams, they should maintain audited financial statements. Then if you talk about Article 21, which is small business relief, so any entity which is claiming a small business relief, they should not comply with the corporate tax and transfer pricing rules, but as Mr. Chirag mentioned, sorry, Mr. Samir mentioned, that they are still required to register under the corporate, for the corporate tax purposes. Then if you talk about Article 61, these are the transitional rules. This is also one of the very important articles for TP as well, because it talks about your closing balances, which would be your opening balance for the next tax period. So all the balances which are relating to your intercompany transactions, your account receivable, accounts payable, they should be at arm's length. And also if you have any loans or if you have any purchase and sale of fixed assets, so you need to look that, you know, these are at arm's length. Then Article 18 is qualifying free zone person. So as we all are aware that a qualifying free zone person would be taxed at the rate of 0%, subject to certain conditions if it's satisfied. So it will enjoy a 0% tax holiday. Then coming to the GAR rules, so it's very, very important to understand these rules because it says that if you have done any change in your business, there should be a proper business rationale, a solid business rationale behind that, because the tax authorities will always focus that you are not doing anything to get a tax advantage. So as a rule already came in December 2022, so we should, you know, be very, very careful that if you are making any business changes in December 2022, they are very, very, you know, they have a solid rationale behind that, you know, change, and it is not leading to any tax advantage from the clients. Then Article 31, which is interest deduction limitation rules. So it basically relates to your interest deduction up to 30% of your EBITDA. So this article not only covers your third-party interest, but also your related party interest. So I think you should be very, very careful here, and you know, you should keep in mind that you're leveraging your group and you're not exceeding, you know, the 30% limit which is available. Now, briefly coming on to the articles which are relevant for transfer pricing purposes, which is Article 34, which is arm's length principle, Article 35, which will help you to review your related party transactions and your determining your control, and then there is Article 55, which will talk about your transfer pricing documentation. So this is like a brief idea what we do. Okay, now this is an exciting part. So what are the key points which, you know, as a transfer pricing advisor, I look for? So I always start with identifying your related parties and connected persons. And of course, the second step is to identify your related party transactions, be it domestic or be it international. For example, mainland to mainland, free zone to mainland, free zone to free zone, free zone to overseas, overseas to mainland, overseas to free zones, things like that. Then as a next step, I will see whether the intercompany transactions of the group, whether they are at arm's length or not. That means all your related parties, all your related intercompany transactions should be priced and in a similar manner as your unrelated party transactions. So I will look for that. for the, and as a next step, I will ask my client, okay, so you have this related party transaction. Do you have any proof to substantiate that your intercompany transaction is at arm's length? So what we'll ask if there are any transfer pricing benchmarkings which are conducted using your famous and globally accepted databases, like we have TB Catalyst, we have Royalty Source, Royalty Range, Loan Connector, and things like that. Now, next step would be the intercompany balances, which is also very, very important, which I briefly mentioned earlier. So we will always see whether our clients are clearing their intercompany balances. Reason being, as far as my experience is concerned, in some of the countries, if the intercompany balances are lying in your balance sheet for more than 6 months, the tax authorities consider them as a loan advance to your group company. So I think we need to be very, very careful here. Now, this one is pretty exciting. Foreign TP audits for group entities. So if your UAE taxpayer has certain transactions with the group entities, with foreign group entities, and these transactions were challenged in the past by foreign tax authorities. So I think here it raises my eyebrow, and here I'm really, really careful when analyzing these transactions. I give more attention and more love to these kinds of transactions from a UAE perspective. Now, segmenting of management accounts for related parties. So we always, you know, since all the group companies are, groups here are dealing with your related parties and unrelated parties, so we always ask our client to give us a segmented analysis of the related party business and the unrelated party business, so we can just assess what is the revenue from both related party and unrelated party. Now, this all ends in a UAE transfer pricing documentation. On the right-hand side of my screen, if you see that I have listed certain takeaways after this process I do with my clients. So I see that, you know, is there a documentation maintenance threshold, which is already clarified by the Ministry of Finance recently. I'll just talk about it in a moment. Then there is no threshold for preparing the transfer pricing disclosure forms yet. So we are waiting for a clarification. And what would be the exact content of your master file, local file, and your transfer pricing disclosure form, even though we know what is contained in the OECD BEPS Section 13, but still, you know, we can await for a particular format if they are intending to. Then we are expecting some more clarity from the FTA on the transfer pricing documentation for a qualifying free zone person. Of course, our initial expectation is that it would be a tax resident, but let's see what happens for transfer pricing there. Now, last 2 points, we are still waiting clarity on the APA procedures. So what is the APA procedure? In general, APA is an advanced pricing agreement, which just give you a certainty of your transfer pricing mechanism for your intercompany transactions. So it's just, you know, briefly I've touched here, but of course we can discuss more offline. Lastly, there are certain transactions which, you know, the transfer pricing documentation rules briefly, you know, mentioned here, that all your transactions between your mainland and to another mainland company, they are tax neutral. That means they don't have any cash tax impact, meaning that, you know, mainland entity 1 or mainland entity 2, both would be paying a 9% tax, so they would be tax neutral and there would be no cash tax impact. And yeah, would that, of course, okay, then if we see that these kinds of transactions should not be a part of your local file, but what about your TP disclosure form? Do we need to mention these kinds of transactions in TP disclosure forms or not? So these are the questions, you know, we should look for and await for clarification. Then here, I will just briefly discuss what are the elements of the different transfer pricing requirements, very high level. So basically the transfer pricing documentation requirements include your transfer pricing disclosure form, your master file, your local file, and your CBCR. So Generally, a transfer pricing disclosure form includes your overview of your intercompany transactions, who are your group entities, what is the value of your intercompany transaction, and what is the methodology you have taken to remunerate those transactions, and whether those transactions were undertaken are at arm's length or not. Now, moving on to the master file and local file, they are subject to the applicability as per the ministerial decision released by the Ministry of Finance. This is decision number 97 of 2023. So if you talk about, high level, what are the contents of such documents? So a master file would give you an overview of the group from 60,000 feet. And it will have a group function analysis, and it will have the details of the very key intercompany transactions, service transactions basically, within the group companies. And then it will have group intangibles and how is the group finance, and also the consolidated position of the group as per your consolidated financials for the group. Then your local file, so it would be very, very specific to your local taxpayer. So it will just highlight your business of your local entity, what are the intercompany transactions undertaken by the local entity, and what is the function analysis for the intercompany transactions, who is doing what. And then it will have the transfer pricing benchmarks to substantiate those transactions, and then, of course, the local financial position of the UAE local taxpayer. Now, if we talk about CBCR, so CBCR is required in case if your group consolidated revenue is more than 750 million euros. So it highlights basically your business, your profits, your tax position, number of employees, and other information which is on your screen. You can just quickly read it if you want. Okay, now moving on. Like I mentioned, I will just discuss the transfer pricing documentation requirements which are recently released in the ministerial decision number 97 from the UAE Ministry of Finance. So they have already mentioned who will prepare a master file and a local file. So there are two conditions. The first condition is relating to your group revenue. If your group revenue is more than or equal to 3.15 billion dirhams, then you are required to maintain and prepare a master file and local file. Now, second condition, if you don't meet the first condition, then the second condition for you is relating to your local revenue. So if your local revenue is more than 200 million dirhams, then you would be required to prepare and maintain, please note, maintain, not submit, maintain master file and local file. You would be only required to submit these documents in case there is a request from the FTA, and this you have to submit within 30 days of the request from the tax authorities. So this is a mandatory requirement to prepare and maintain, but only submit when the tax authorities ask for it. Now also there were, in the ministerial decision, there were also certain inclusions and exclusion in terms of entities undertaking intercompany transactions with entities of such nature, which is on left side of your screen. So any intercompany transaction, if the UAE taxpayer is undertaking with a non-resident person, it should be included, or an exempt person. So an exempt person would be any government entity, any government control entity, or any entity which is undertaking natural extraction business, things like that. So the next one is any entity, if it is claiming a small business relief, then any transaction with such entities should be included in the local file. And lastly is if any resident persons subject to a different CT rate would also be included. And on the right-hand side of my screen, there are certain exclusions which, could not be a part of a local file or a master file. So exclusion are any transactions with resident persons which are other than the inclusions ones. So you can include that, you can exclude, sorry, from your local file, and any transactions with natural persons or juridical persons who are transacting independently, you can exclude that, and any permanent establishment of a non-resident person in the UAE taxed at the same rate as a taxable person. So maybe for the last one, I can give an example. So there is a mainland entity, and there is another entity of a UK company. I will just explain an example in the last as well for you, but quickly just to understand this point. So the UK company has a branch in UAE mainland, and there is another entity which is in the mainland, which is also, having a tax rate of 9%, and this branch of the UK company in the UAE would also be taxed at the rate of 9%. So these kinds of transactions could be out from the local file. Okay, now I have a question for you all, and I hope I can have some show of hands. So how many of you think that transactions between a free zone entity and a mainland entity would be a part of the transfer pricing compliance? Okay, nice. So the ones who are raising the hands says yes, and they are absolutely correct. And the ones who have not raised their hands, sorry to disappoint you, they would be definitely a part of your transfer pricing analysis. Reason being, there's a tax arbitrage. So I'll explain you how. So if there is a free zone entity, it is having a qualifying income. So it would be taxed at the rate of 0%. And if there is a mainland entity of the same group, it would be taxed at the rate of 9%. So there is a high chance that this mainland entity would transfer this profits to the free zone entity to get a tax advantage of 0%. So it's very, very important to document and analyze these kinds of transactions. Okay. So this is one of my favorite slides. So there are certain clients who don't meet the transfer pricing documentation materiality threshold, but still I recommend them to prepare transfer pricing documentation. Reason being, from a best practice perspective, we should maintain transfer pricing documentation, and also it will help us and the clients to comply with your arm's length principle, which is Article 34, and it will also help the client to safeguard their own interest, because they are mentioning the same thing in their transfer pricing disclosure forms. So whatever methodology they are mentioning in their transfer pricing disclosure form, it's at arm's length. And also, in many countries, I have seen that most of the clients, they also prepare transfer pricing documentation, not only because of the best practice perspective, but they also want to be ready in case there are any transfer pricing related audits, in that country. And if there are any questions from the tax authorities, they are really ready for it. And also, if I talk about my experience in the UK and the Netherlands, so there is a similar, materiality threshold. For example, in the Netherlands, if you have a consolidated group revenue of 50 million euros, you have to prepare a master file and a local file. And there were certain clients they used to come to us that, Sheetal, we still need a transfer pricing documentation, because we really would like to, cover ourselves, be ready, and things like that. So what I used to do there, I used to recommend them, you can just not prepare a master file or local file. You can prepare a transfer pricing memorandum, which is like a short form of your local file, but it would have sufficient details to prove that, all the transactions you are undertaking, they are at arm's length. Okay. Now, this is my last slide. So here, I have just prepared a case study for you all to, bring into light all the tax and transfer pricing considerations we have just discussed, and also how it would, work in a practical scenario. And of course, just for you guys to have a food for thought and think what will happen. So just to explain you the case study, there is a BVI company, and then there is a UAE mainland company 1 and 2, and there is a UAE free zone, and there is a UK company. So this UAE mainland company is the regional headquarter here, and then this BVI company is getting a passive income, and this mainland company 1 is providing the supply of products and head office services to the UAE free zone company, and it is also providing similar services to the mainland company 2, and the UK company is providing contract manufacturing services to mainland company 2, and then there is a UAE branch of the mainland, which I discussed earlier. I hope you remember. It is providing a loan for working capital requirements. So here, in this case, and of course, all these companies, they are part of the same group. So if this scenario comes to me, what I will think, what are the key, considerations, implementation consideration I would think. So first of all, starting with the legal structure, of course, we will see whether this mainland company 1 and mainland company 2 and this UAE branch in the mainland could form a tax group or not, because the free zone company would, of course, be out of the tax group. Then next thing, what hits to my mind, how this passive income would be dealt from a corporate tax perspective. What would be the implications for this? Then there is a qualifying free zone company. What would be the implications here? If it is having a qualifying income, then it will be taxed at 0%. If non-qualifying, then 9%. So these are the questions which I will think. Then in terms of your intercompany transactions, like the sale of products, head office services, and things like that, contract manufacturing, I will make sure that all these transactions which the group entities are undertaking, they are at arm's length, and they have sufficient proof, in form of transfer pricing benchmarks to prove that all these transactions they are undertaking, they have been dealt with arm's length terms. Next step would be for me to think about the transfer pricing disclosure forms. What kind of transactions will go into my transfer pricing disclosure forms? And is there, a chance that, this group would be qualified for the preparation of transfer pricing documentation like local file or master file? Now, lastly, which is a very, very important point, how are the ERP systems ready to accommodate these treaty and TP requirements, meaning I will ask the client if their ERP systems are already ready to compute the taxable income by themselves, or if they are already ready to generate the correct invoices from a transfer pricing perspective, and also if they are able to generate the segmented analysis for an unrelated party transaction and related party transactions. So these are the questions I will always think and ask my clients. So I think that's it from my side. I just tried to quickly wrap up my session since we are running low on time. So thank you so much, everyone, and being a lovely audience, and thank you. Oh, okay.
Thank you, Sheetal. I love the part in your entire presentation. 2 times you looked at your watch. So you were keeping time that you will be sticking to the time. That was really helpful. Thanks a lot. Give a round of applause for Sheetal. And we'll invite Chairman, Vice Chairman, our past Chairman Naveen ji, and Ashna on the stage for presenting a token of love and appreciation to Ms. Sheetal for such a lovely presentation. Finally, we have reached to the last session, but before I start the last session, I will first say sorry to all of you. We said 5:30 will close, but still we have one more session to go. Really sorry for keeping you waiting for that. Sometimes it so happens that you try, but you cannot stick to the time. Sorry to everyone for getting delayed today. Second is feedback forms are getting circulated with after every event. You will see the link coming to the WhatsApp groups. We send it. I think all of you should be form of WhatsApp groups. Please do give feedbacks. That helps us to understand where we should go and what exactly we should want to achieve as a group together. Because yes, we are there for you, but we'll need your support to understand what exactly the feedbacks you give us. So we'll wait for that feedbacks to come on the feedback forms. Lastly, the presentation part. So many messages have come during the event itself that whether we'll get the presentations or not. I think Atul Bhai was very clear that he is sharing that presentation. We'll put it on the website. From there, you can download it. I think same concurrence, Samir, I see a thumbs up there. Seetal, I will check with her if she's ready to share the presentation from UHY. We'll upload on the portal. So all your presentations, which speaker gives us the permission, will be uploaded on the website. From there, you'll be able to download. Don't worry about that. That's our responsibility to circulate if speaker provides the permission. Lastly, now moving to the last session, a special session, as our last speaker will be covering the remaining decisions. We'll humbly request our ExCom member, CA Sanjay, to please come up the stage and introduce our own member and speaker, CA Chirag Gupta. A round of applause for Sanjay ji.
Good evening, ladies and gentlemen. Thank you, Mr. Secretary. I'm pleased to introduce our next speaker, CA Chirag Gupta, who will shed light on the exemption from UAE corporate tax registration. Chirag is a chartered accountant, company secretary, cost accountant, having more than 15 years of experience in UAE, Africa, and India. He specializes in audit, corporate tax, VAT, reporting, internal controls, and compliances. He has been exposed to the company startup project in UAE, India, and Africa again, project implementation, financial reporting processes to facilitate better business decision. Chirag, our own member, is one of the approved insolvency practitioner and official liquidator with DIFC Dubai. He is also a frequent speaker on various forums, including radio show, universities, and seminars conducted by various organizations in UAE. Ladies and gentlemen, he's already here, but please join me in giving me a big round of applause to CA Chirag Gupta.
Thank you, sir. Thank you. Thank you. Sure, sir. Thank you so much, Sanjay Bhai, for the kind introduction, and thank you, ICAI Dubai chapter, for the opportunity. Straight away, I will come to the topic due to time constraints. So today, we are going to discuss about 6 decisions, starting with 3 ministerial decisions, 2 FTA, and 1 cabinet decision. Since we all know the basic differences between these all, I will not cover that. First is the agenda, how many decisions I would be covering. Let's begin with the change in tax period. So as we all know, tax period, is the financial year for which the taxable person has to compute the taxable income and submit the return. Why it is important? Because the proper allocation of income and expenditure has to be made for the period. So decision number 5 of 2023 of the FTA was issued, and it says that we have to make an application in order to change the tax period, which can be for 2 different reasons. First is change for start and end date or a different tax period. Also, for the tax period, he wants to apply the period should not be submitted. Then, in case of shortening the tax period, it should not be allowed for prior or the current tax period. The timeline. There should be minimum 6 months before the end of the original tax period in which the taxable person is allowed to submit the application. Now the conditions or the reasons for which tax period change is allowed. First and foremost is liquidation. It makes sense because if the company is getting closed and the liquidator or the company wants to submit the return before the end of the period, which is a welcome move. Moving on, alignment of financial year. Suppose for the resident taxable person who wants to align his financial year with another resident person to form or to join a tax group. Then alignment of the financial year for the purpose of financial reporting to align with that of his head office or a parent company or ultimate parent company. Then for tax relief. Anyone from the audience can guide what tax relief over here the decision talks about? Is it small business relief? No. It talks about like in case of transfer of tax losses, business restructuring relief, or to form a qualifying group. Then last and foremost, in the case of any foreign jurisdiction. Third reason, it can be any commercial, economic, or legal reason, like in the case of M&A. A company has been acquired by some other company, and the parent company structure, the financial is different. In this case, it may be allowed to change the tax period. Now, as we discussed that either we can extend or reduce the tax period. So in case of extension of tax period, it is allowed for the current tax period, and it can be maximum for 18 months. In case of reducing the short tax period, it is only allowed for the next tax period, and it can be between 6 and 12 months. Now over here, if you see, it's very much aligned with the UAE commercial company law, which talks about that the financial year can be for minimum 6 months and maximum 18 months. Moving on, is it possible to change the tax period more than once? Again, it depends. Like suppose first the company wanted to join a tax group and later on, unfortunately, decided to liquidate. So yes, possible, but let's see one more example. The company's financial year is from June to May, and because of the corporate tax being announced from 1st of June, the management decided to change the tax period from 1st Jan, and later on they decided to move it from 1st of April. So in this case, most likely this will not fly, and FTA will reject that application. What happens if the FTA denies the application? Do we have any right? Maybe we can submit a reconsideration application to FTA, and if we are not satisfied with the reconsideration application, we can approach to TDRA, which is Tax Dispute Resolution Authority, and to the competent court if you are not satisfied with the TDRA reply. Then moving on to the separate decision, which is on the exemption from tax registration. So in this case, for the following taxable persons are not falling under corporate tax, and hence they are out of the scope. First and foremost is government. Again, this is international best practice. As we have seen, governments all across the globe, they are not in the corporate tax purview of any country. So over here, there are two kinds of taxable person. First is government entity, and then is government control entity. So government control entity, as we all know, that it can be owned by one or more different governments. The basic difference over here between government entity and government control entity that we have to see is that government entity are automatically exempted from the corporate tax. However, for non-government entity, there will be a separate decision that would be coming out, and they would be list how many government control entity are outside the purview of the corporate tax. Moving on, person engaged in extractive business and in the non-extractive natural business. If you see the UAE constitution, whatever are the resources or the natural resources, it is under the property of that respective emirate. Hence, the respective emirate are having the emirate-wise taxation on those kind of activities. Since they are already under the purview of the respective emirate-wise taxation, they have been removed from this, which again aligns that there is no double taxation. Over here, if you see, the word is natural resource. So whether sun or like say wind, the person into solar business, whether they will also cover here. If you see the law, it talks about only non-renewable energy, which is coal, oil, or let's say, they have also covered water in that, just for your knowledge. Moving on to a non-resident. If a non-resident has only UAE source income and they don't have a P, they would not be covered over here. Let's say, for example, now since the date corporate tax was announced, there are many phone calls we have received. Many people have come up from the subcontinent that they would also do their own practice over here. So whether any income that is paid to them, they will be not covered over. They will be covered over here, and hence the registration is not required. But we have to make sure that while making a payment to them, we deduct withholding tax at 0%. Now moving on to audited financial statements, the ministerial decision defined that who are two different categories for which audit is mandatory. First is having a revenue exceeding 50 million and for qualifying free zone person. I'm not going into definition of qualifying free zone person, but what about if the revenue is less than 50 million? Is audit still mandatory? Yes, if you see the UAE commercial company law, the law clearly says that it is mandatory for all the companies. However, the general practice is that since authorities are not asking or requesting, nobody is taking care. Or if you see the relevant free zones like DMCC, Jebel Ali, their audit is mandatory. So still, the revenue is less than 50 million. The respective companies might have to do the audits as per the relevant rules of the country. Moving on to another one, which is exemption from corporate tax. So these, if you see the Article 4 exemption, it talks about two different taxable persons. First taxable person, they are automatically exempted from corporate tax, like government control entities. And second is, they're exempted, but not automatically. The taxable person has to apply, and it depends upon the FTA whether they approve or not the application. So talking about qualifying public benefit entity, as the name suggests, they are into, you can say, social or economic for the country, and hence, just to reciprocate how much importance it holds for the UAE country, the government has given them exemption from the corporate tax. So in this case, they have to apply for tax registration and before 1st of October 2023. Second, it talks about qualifying investment fund. So as we all know what is investment fund, the primary objective of investment fund is to take the money from the investors and invest in a particular fund. So the investment fund, again, they are giving a benefit to the investors. Why? If the investors have directly invested in an investment in the qualifying asset, the investor would not be charged. Hence, to maintain the tax neutrality, this provision has been introduced. Further, we have social funds, pension funds, and any other person, they should apply, and it depends upon FTA whether they approve or reject the application. Now, in all these scenarios, FTA can also request the taxable person to submit an annual declaration to make sure that they are satisfying all the conditions and not misusing it. Moving on to another ministerial decision in which exempt person can still be deemed as an exempt person. Before going further, let's see what the Article 4 says. It says that an exempt person, if it fails to satisfy one of the conditions which gives them the power to be an exempt, they are not able to satisfy, then they will be treated as a taxable person from the first date of the relevant taxable period. However, the law gives power to the ministry that they can have their rules and guidelines when the taxable period can be later, or they can still be deemed as an exempt person even if they are not satisfying the conditions. So first condition which they mentioned is liquidation. Second is any event which is beyond the control of the person and which was not foreseen. So in this case, the process is very simple. They have to apply to FTA within 20 days of noticing such thing, and FTA has further given relaxation that further they can give 20 days in case of any such reasonable control. However, in this case, again, we have to make sure that there is a reasonable grounds is there, and FTA can request for further clarity, like say what business plan do you have to rectify such kind of scenarios. Now moving on to my another slide, which is qualifying public benefit entities. This is my last slide. Over here, the FTA has given the list of public benefit entities which are covered under the cabinet decision to give better clarity to the public. So any donation which the company is making to qualifying public benefit entity, this would be given as an expenditure under the corporate tax return. So if you see, there are total 521 public benefit entities mentioned, and government has the right to modify. It means they can either add or less depending upon the case to case, because there are certain restrictions, certain requirements of the cabinet decision that they have to fulfill. So if they are not able to fulfill, FTA has the right to reject their application. I have not covered all the public benefit entities, but I have listed a few of them. If you talk about the federal entity, Kerala Social Center is mentioned over here. If you talk about Abu Dhabi, Babs Hindu Mandir, Guru Nanak Sikh Temple. In Dubai, again, Guru Nanak Sikh Temple is there, Sindhi Ceremonial Center, and for Alain, we have Indian Social Center. So with this, I end my presentation. Thank you so much for patient listening, especially being a Sunday. Thank you.
Thank you, Chirag. You have been mindful of the time. You knew that we are running late and you considered the time. Thank you very much. I'll invite our chairman, vice chairman, and Sanjay. Sanjay, are you around on the stage for felicitating Chirag? And for the members who are going out, if you are a Jan, just remember that you will find your food boxes on the left side when you are going out. Strictly Jan, please go for it because those boxes are limited. So if you're strictly Jan, please go for the left side, otherwise on the right side, otherwise left side is your normal boxes, only for strictly Jan. And a round of applause for Chirag for maintaining the time. He completed his presentation in 20 minutes. That is only possible because of him. Thank you all for joining us for this session and hope we added value to your learning today. I'll fail in my duties if I do not acknowledge our sponsors, and to acknowledge them, I will need your support by clapping throughout when their name is being read. Title sponsor, Bricks and Woods Real Estate. Principal sponsors, SNG, Mayur Batra Group, IFCO, Lulu, AGMC. Platinum sponsors, Nadeem and Umendra, UHY, SBC, WMS CloudSook, Nailsoft, ECAG, JDocs. Banking partner, BOB. Media partner, KT. Travel partner, Uranus. FMCG partner, Aktia. Institutional partner, DPS. And magazine partner, Finance Magazine. Thank you very much. I know you are in a hurry, but you can clap for our sponsors. Thanks a lot. And that's the sign off. Thank you very much. Thanks. Bye.